government agency. I'm here as a senior non-resident fellow of the Gulf International Forum. This is the 7th conference. I believe I've spoken at all 7 of them, so it's quite an honor for me to be here. The theme today is From Energy to Innovation Engine, Digital Strategy, Economic Edge, and Regional Resilience. We almost got the perfect alliterative title, but unfortunately we missed that, and the reason why we broke that was because we didn't want to sound like Dr. John Duke Anthony, for those of you who are Gulf experts and familiar with that. We've had a slight adjustment to the schedule. I'll be your compare for the afternoon. Mostly because I'm kind of physically imposing. So I have no knowledge of the region, but I'm here to move people along in a friendly manner, if preferably, but a threatening manner if not. So that's the deal there. We have the way out, if there's an emergency, is the way we came in. Restrooms are to the rear on this level. And basically, we want to have the goal here of fostering interaction between policymakers, scholars, practitioners, and industry leaders across the Gulf and the United States. There's no surprise. The Gulf is more important now than it ever has been, particularly in the economic sense. It is one of the drivers of the global economy. It's gone from being really an afterthought in the broader Middle East. When I was in graduate school in 1990, I recall a distinguished professor of Middle Eastern geography describing the Gulf as Yawn City. I don't think anybody could say that now. I don't think anybody could say that now. And what we're seeing is not just adaptation of technology produced elsewhere, but a movement in which, in economic terms, in investment terms, in technological terms, the Gulf is actually moving to the forefront. And it's moving with a vibrancy and with a level of commitment that we don't see in any other region in the world. This really is a unique effort. And we're seeing that in foreign policy, we're seeing it in defense policy, but of course today we're talking about the economy where we're seeing it. We would like you to stay engaged during the day, ask probing questions. A statement is very rarely probing in a way that a question is, so please ask probing questions. Both of those words are important. And with that in mind, it would be my pleasure to introduce to you the Executive Director of the Gulf International Forum, Dr. Danya Thoffer. Dr. Thoffer is also a lecturer at Georgetown University and teaches at the U.S. State Department's National Foreign Affairs Training Center courses on the Arabian Peninsula. Additionally, she's a senior non-resident fellow at the Middle East Council on Global Affairs. She has a distinguished career of publishing. Her most recent book, which is well worth reading if you haven't, is called Creative Insecurity, Institutional Inertia and Youth Potential in the GCC. So think about that. Institutional inertia and youth potential. That kind of summarizes the challenge of government in the world today for those who are still employed by government or paid by it. She'll address many themes in today's conference. She also co-edited a book with me some years ago on Gulf security, and if you read that book, you will join the editor and my mother as the only other people who have read it. So no, that's not true. That's not true. My aunts all read it as well. She's a frequent commentator in outlets such as the New York Times, the Financial Times, and CNN. She regularly addresses government and international organizations and global institutions on Gulf affairs, bringing academic rigor and policy to all that. And most impressively, she accomplishes this as the mother of 2 small children under the age of 10. And if that does not impress you, then you just do not know what children are like. So with that in mind, it's my pleasure to introduce somebody who I'm proud to call a friend, somebody who is a role model, I think, for studies and for building bridges between the West, particularly the United States, and the Gulf, Dr. Danya Thoffer.
Good morning. Thank you so much, Dave, for that kind introduction. I'm humbled. Dave has been my friend since my first job in Washington, D.C., and when I was a little fledgling in Washington, D.C., and I appreciate him greatly. We've worked together ever since. On behalf of Gulf International Forum and the Middle East Council on Global Affairs, it is my pleasure to welcome our distinguished guests and speakers to the 7th Annual Gulf International Conference. This is our policy conference. We have it every year in the fall. Usually it's been on geopolitics. This is the first time we did it fully on economics, which I'm very happy to do, as that is my field of research and interest. We are honored to be joined by a wide array of distinguished speakers, including His Excellency Dr. Mohammed Nidal al-Sha'ar, Minister of Economy of Syria. And also, we are very pleased to have His Excellency Mahmoud al-Awaini, Secretary General of the Ministry of Finance for the Sultanate of Oman. And also, we're distinctly happy to have Her Highness Princess Noura bint Turki Al Saud with us today. And we are also delighted to welcome all of our distinguished guests, ambassadors from people from the Capitol Hill, and the policy and diplomatic community, and leading universities and research institutions. Your presence really reflects the importance of this dialogue at a time of profound global and regional transformation for the Gulf countries. Gulf governments are driving a bold transformation, reimagining their economies for a post-hydrocarbon future, and turning natural resources into powerful engines of growth fueled by knowledge, technology, and entrepreneurship. The shift from dependence to domestic productivity will be quite a fascinating one. And it's not only economic, it is a societal transformation aimed at cultivating innovation, ecosystems, and nurturing the next generation of Gulf entrepreneurs, scientists, and policy leaders. This year's conference reflects the remarkable shift underway as Gulf states align their domestic reforms with global economic trends. By building a digital infrastructure and expanding investment partnerships, they are creating new pathways for innovation-led prosperity. And this transformation is reinforced by closer cooperation with the United States, whose global leadership in technology and innovation continues to drive competitiveness and economic dynamism in the Gulf. Economic cooperation now forms the foundation of Gulf-US relations, defined by less oil and more shared prosperity, innovation, and investment. The Gulf has become a key partner for the United States across strategic sectors, highlighted during President Trump's May visit, including in defense, energy, artificial intelligence, and tourism, and even critical minerals, which is quite interesting in the case of Saudi Arabia. Through major deals and joint ventures, both sides are shaping a new economic architecture that integrates innovation, capital, and strategic influence to leapfrog into the next generation of industries. And this is quite important for the Gulf, especially in pursuing the fourth industrial revolution. Historically speaking, none of the industrial revolutions were successfully achieved in the Gulf. So this industrial revolution is critically important. Technology sits at the center of this transformation. Artificial intelligence, automation, and digital infrastructure are no longer peripheral. They are central to the region's competitiveness and resilience. Yet with these opportunities come complex questions. How can nations ensure that technological growth advances their economic priorities? How can they strengthen control over data, digital systems, and AI capabilities while collaborating with trusted global partners? I mean, these are questions about digital sovereignty, which come up a lot in discourse and debate when you talk about political economy of technological development. Sustainability remains a defining thread through all of these transformations, although there's a lot of deniers of this. The environmental costs of rapid technological expansion, particularly AI and data centers, demand new thinkings on energy efficiency and responsible innovation. Gulf states are uniquely positioned to lead in this arena. They can integrate renewable energy, focus on circular economy practices and low carbon technology into their digital strategies. Amid these shifts, regional cooperation and economic diplomacy are gaining renewed importance through investment, reconstruction, and fiscal coordination. Gulf states are redefining their engagement with neighboring economies and global institutions. Syria's gradual reemergence offers a reminder that recovery and reintegration are possible. And that's something, I think the region itself can be proud of, and that the Gulf leaders can help bridge the region's digital divide while fostering a more connected and resilient Middle East. The Gulf's expanding role in post-conflict stabilization and regional economic integration marks a new era in which serves not only as a financial center, but as a constructive partner in advancing regional renewal. The conversations ahead will not only reflect the Gulf's extraordinary progress, but also shape its future trajectory. They will help us understand how digital strategy can drive national resilience, how innovation can anchor economic diplomacy, and how partnerships with the United States can translate ambition into shared prosperity. And this is the Gulf's defining moment to successfully pursue the fourth industrial revolution, to lead in shaping the next phase of global economic growth where energy, innovation, and resilience converge to create a future that is dynamic, inclusive, very important, and forward-looking. Thank you very much.
Thank you, Dr. Thafer. So it's my pleasure now to welcome Dr. Tariq Youssef, Senior Fellow and Advisor at the the Middle East Council on Global Affairs and a Senior Non-Resident Fellow at the Gulf International Forum. He will lead our distinguished panelists in examining how U.S. Gulf partnerships have evolved beyond traditional energy and defense ties to embrace trade, innovation, and long-term strategic development. Dr. Youssef and your panels, if you'll please take your places. We look forward to your wisdom and insight.
He said he's 2 minutes away, so we should
just gonna. We don't wait. Okay. Well, good morning, everyone.
Morning.
Morning.
Welcome to the first panel of this very important dialogue. Thank you, Danny, and thank you, Dave, for the kind introduction and for bringing us together at this pivotal moment of U.S. Gulf relations. I was introduced by Dave, so I think that is sufficient. We've got three distinguished panelists with us, one online and two in person. I'll introduce them in a moment, but suffice it to say that we all recognize not just the importance of this moment in U.S. Gulf relations, but the importance of this specific topic that we're going to be discussing over the next 70 minutes or so. This is going to be an interactive dialogue. I'll be posing questions to our panelists, and then I'll be coming to you. And the theme of this first panel is the pivotal moment on U.S. Gulf relations, where the relationship is shifting quickly from being one driven by energy and defense, as we were all reminded a little while ago by Dave DeRoche in his introduction, to one where it's about prosperity and investment, partnerships, joint ventures, and a level of economic ambition to be pursued jointly that we have not seen in a long time. This is a new terrain in many ways. This is taking place amidst all the dislocation we see in the international economic system, the uncertainty, the unpredictability, and the reconfiguration of global economics amidst geopolitical tensions and sources of uncertainty. The Gulf countries, as has been noted, have outlined in many ways their ambition in the coming period. Innovation, diversification, and economic partnerships with every other potential partner and country and region across the world. How this actually fits in with U.S. objectives, current transformation in U.S. policy, both economic, trade, and otherwise, is a question to be asked, to be pursued. And how these could come together and ultimately serve the mutual interests of everyone is a question that has not been thoroughly examined. We have three distinguished panelists, four now, who are going to help us answer some of these questions or highlight at least the broad contours of the challenge, not just the opportunities, but the challenges and the risks associated with how to promote U.S. Gulf prosperity in the current context, given the announcements, given the evident objectives and the thrust of policies in both sides of the world. Our four panelists are here. We have Amin Mati, first to my right. He's the Assistant Director and Head of the GCC Division at the IMF. He's also the Mission Chief for Saudi Arabia and the head of the of all the policy analysis and work that is being carried out by the IMF for each of the GCC countries and specifically for Saudi Arabia. We have to his right Karen Young, it's known to all of you. She's a senior research scholar at the Center for Global Energy Policy at Columbia University and a prolific writer and analyst of energy, geopolitical and economic issues in the GCC and elsewhere in the Middle East. To her right is Fahad Nazar, if I'm pronouncing him correctly. He's an official spokesperson of the Embassy of Saudi Arabia to Washington, D.C. Online with us is a dear friend of the Gulf International Forum and the institutions we represent, and somebody who's familiar to all of us, Yusuf Mohammed Al-Jada, Chief Executive Officer at the very important institution of the Qatar Financial Center. We'll try to have this interactive discussion. There are not going to be any speeches given by our four panelists, and please forgive me for just engaging you on a set of questions, and we'll do it in 2 rounds. The first round will start with the broad structural issues that govern this relationship. And my first question is going to be to Amin. When we talk about U.S. Gulf partnership in the new investment framing of the relationship, we often think of sovereign wealth funds as leading these investments, leading this partnership on the part of the Gulf. So on the Gulf side, any of the announcements that has been made or any of the commitments that would be made is going to be carried out largely by a vehicle that resembles a sovereign wealth fund, if not the sovereign wealth fund itself. I guess the question for you, Amin, is how ready are these sovereign wealth funds actually to be able to discharge the level of investments that have been announced and to govern and to shape this relationship in a way that's mutually beneficial to both sides? Are there any new investment models, risk management models that one can think of? How to ensure that private capital is a part of these investments, and how to ensure, as has been noted by Danny at the beginning, that these investments actually pay off, that they're sustainable, that they deliver not just on the political promises, but on the developmental objectives. Sorry for a very broad question, but I just wanted to put it on the table up front.
Thanks a lot for your question. Thanks a lot for having me. I mean, let's put things in context in terms of the GCC in the economies. I mean, one of the speakers earlier talked, I mean, they have been a bright spot and they have been resilient. And they have been resilient also because they have been pursuing domestic economies. When we talk about Vision 2030 for Saudi Arabia and the other visions for each of the Gulf countries, the idea is how to diversify the economy, how to make sure that you move away from oil. They've done quite a lot of progress in that, and sovereign wealth funds played a role in that. And you do have sovereign wealth funds that traditionally have been investing abroad, including in the United States, but have in some cases now been increasingly investing in the local economies. This is how they were able to get, in addition to some structural reforms taken, this is how they were able to get more non-oil export growth. This is how they've been able to get the GDP or the composition of the GDP changing towards services and retail, etc., as opposed to relying mostly on oil. And to get back to your question on, so the sovereign wealth funds are involved in the domestic economy, and then when they invest abroad, they have to make sure that the returns that they have are there. So there's two goals for a sovereign wealth fund, right? A traditional sovereign wealth fund is really there to play a countercyclical role. So here in this case, a countercyclical role given what's happening with oil prices. So if oil prices go down, then you're going to have the returns that the sovereign wealth fund has earned abroad that you can use domestically in case of a shock. But also now the sovereign wealth fund is involved directly in the domestic economy. So you're going to have to balance these two roles. And the fact that they are investing abroad in new technologies, in technologies that can bring back the return to the country, there's like a lot more partnerships. We've seen, sovereign wealth funds like in Saudi Arabia, the PIF, investing in soft vision, in Lucid, trying to get new technologies that come in. We've seen it in the domain of AI in some of those industries. Qatar did that, and etc. So these are some of the new industries that can bring knowledge transfer and that could maybe bring some high return. These are big investments, and I'm sure you're going to come later on digitalization, and we'll tell you that in the GCC, in terms of AI preparedness, they're actually quite high. And the return there, in some of those industries could be high. I mean, we have, just for Saudi Arabia, we've done analysis that labor productivity could increase over the medium term by about 5%, just through AI. But there's, of course, it's not just a question of investing abroad and getting the return, it's also making sure that the technology comes back and that you have the human capital that can use it.
Thank you, Amin. Yusuf, Jade, I want to bring you in at the beginning, if you don't mind. Your Excellency, Yusuf, are you with us?
Not sure.
Yeah, not sure he is. Are you with us, Yusuf?
Yes, I am.
Excellent.
Is my voice
we can
okay?
hear you.
Thank you.
Bit of an
Dr. Tara, good to see you, my friend.
Okay. And I know it's early evening your time, but thank you for joining us. And I guess I want to direct the question to you as we go from thinking about sovereign wealth funds in general to specifically thinking about the opportunities for US and Qatar in this new investment partnership framing of the relationship. I listened to you a few days ago at HBKU speak about some of the specific advances that QFC has led in creating an ecosystem in Qatar that can be conducive for innovation, for SME development, for knowledge sharing, and for attracting FDI from abroad. How does this investment that you've made on your side, and how do Qatari entities that are mandated with promoting the investment relationship with the US, what opportunities do they see? How do you actually focus on the US relationship and make the most out of it for Qatar, but also make this worthwhile for American companies and American investors?
Well, thank you very much, Dr. Tariq Youssef. Is my voice okay? Okay. Thank you for having me. Apologize for not being able to be there in person. It was short notice, and I wasn't able to get my visa on time, so apologies for that. I want to say, again, thank you for having me, and as we say in Arabic, Assalamu alaikum wa rahmatullahi wa barakatuh. In terms of Qatar and the US, Dr. Tariq, if I may address this from first of all, a Qatar perspective, and then I can zoom in from a Qatar Financial Center perspective. I mean, if we look at Qatar's story, as you know, Qatar has been always marketed in the past decade and a half as a natural gas powerhouse. We are currently becoming the largest LNG exporter in the world very soon.
Recording in progress.
As you know, there's an expansion in terms of LNG facilities that will reach around 126 million tons, which will put us ahead of the US and Australia in a very short period of time. So Qatar is moving now and looking into how can we move from being a powerhouse in energy to becoming also involved in innovation locally and regionally, and to be able to get there, we have done massive reforms in the local economy, and the Qatar Financial Center is one of those entities that are involved directly in those reform activities by the government. But let's begin by the strong baseline. The Qatar and U.S. relationships haven't been better. The trade between the U.S. and Qatar is around $5.6 billion as of 2024. We have currently a surplus with the U.S. of $2 billion. So the numbers between both nations are very healthy. We've seen in the recent visit of President Trump that there was also many allocations announced from the Gulf countries into the US in terms of investments by the sovereign wealth funds. Qatar announced a figure between $800 billion to $1 trillion to be invested in the US. So the numbers are very healthy. If we look at the venture capital activity in the MENA region, they're totaling currently around $2 billion as of 2024 and $1.5 billion in the first half of 2025. Capital markets are also healthy in the GCC. We've seen bond issuances reaching a record year of $126 billion in 2005, which is an increase of around 20% year on year. There's also a huge momentum on sustainable finance. Sustainable bonds in the entire Middle East amounted to around $16.7 billion in the first 9 months of 2024. And we've seen the global sustainable finance issuances surpassing about 1.1 trillion in 2024. So in short, capital is available, demand exists, and timing really matters. So first of all, I want to focus on how we can strengthen the relationship given all these healthy macroeconomic figures, first between the US and the GCC, specifically US and Qatar, and the global macroeconomic situation as well. I believe that we should establish bilateral co-investment vehicles, given those large numbers that were recently announced. We should focus on artificial intelligence, quantum technologies, climate technology, and health technologies as well. And we believe from a Qatar Financial Center perspective that these funds should blend public and private capital, share risk appropriately, and provide dual market access from day one. And we have a strong precedent that we've announced in Qatar through the Qatar Investment Authority between the QIA and the Antara platform in Indonesia, which was a $4 billion initiative that we can adapt as a template for US-Qatar co-investments in technology. Second of all, I think we should also start forming technology joint ventures that localize research and development and develop talents at scale. There's a huge focus in Qatar on developing local talent through global investments. Quantum is also compelling as a starting point. We've heard recently of the Quantinium and Al Rabban joint venture in the US, which committed around $1 billion over the next 10 years for system access applications and workforce developments, which demonstrates that there is actual execution happening on the ground. Third of all, the SME investment framework is very important for us in Qatar as well. We should de-risk early stages, co-match with private investors. And here we want to invite US investors to look at the GCC and look at Qatar as a viable market. We can, from the government, by the government, and using government initiatives, we can seed many Series A companies that could feed our co-investment vehicles here in Qatar. The Qatar venture capital size in 2024 reached about 115 million Qatar riyals, which is a very small figure, which shows there's a lot of room for development, and that's around $31.5 million only. Still an increase compared to last year, which is 135% here. But we have recently deployed a lot of government funds to develop the SME sector and the venture sector. We've hosted the Web Summit initiative last year in Qatar. We're hosting it next year as well. Within the Web Summit, we have been able to invite global technology companies to come visit Qatar and look at Qatar as a viable base and destination for their regional activities. We were able to register more than 600 companies in 3 days. We had issued resident permits on the spot, opened bank accounts on the spot, showing the government's dire want to attract technology companies and venture capital companies to establish in Qatar. So we offer a welcoming base and a welcoming home. We've also announced $1 billion in the Web Summit by the Qatar Investment Authority to invest globally in venture capital funds who want to establish themselves in Qatar and invest globally. And again, 3 of those companies are US companies. They've been seeded with around $250 million to $300 million. And the idea here is to get the mind and management on the ground in Qatar, established in the Qatar Financial Center, investing globally, attracting some of those venture capital companies to portfolio companies to come into Qatar, enter into Qatar, and be able to expand in Qatar and into the region. So, you know, there are these are very important initiatives for the state of Qatar. We're trying to diversify away from being only an energy powerhouse. We've seen a lot of we've seen a lot of mediation by the state of Qatar, as you know, in global politics, and we've seen some of the geopolitics in the region recently by Qatar, led by Qatar. A lot of good mediation work. So, you know, I come in with the Qatar Financial Center to try to diversify some of those efforts into developing the local economy and diversifying away from oil and gas. And with that, what we want to do is attract some US capital into the Qatari market, have a two-way type of arrangement, not only investing $800–900 billion into the States, but also welcoming some of those companies being invested in the States to also reroute some of their expertise, talent, business, services into the Qatari market.
Thank you, Yusuf. That was very helpful. From Qatar, we go to Saudi Arabia. And I think it's fair to ask the question also, in the case of Saudi Arabia, the US-Saudi Arabia partnership in investment and prosperity. When we think of Saudi Arabia, nowadays we think of Vision 2030. We think of the remarkable transformation that is taking place, which started before President Trump was elected, and that signaled the direction of the country. I guess given where we are at this pivotal moment, how does Saudi Arabia see the opportunities in this partnership as they're embedded or reflected in the priorities of Vision 2030? I mean, is Vision 2030 being adjusted, amended, calibrated to take into account the opportunities and the challenges presented by the new US Gulf partnership?
All right, well, thank you very much. Can you hear me? Is my mic on?
Yes.
Okay. So thanks very much to the Gulf International Forum. And again, my apologies for coming in a few minutes late. It took me 90 minutes to drive 9 miles. So traffic can be tough on a Tuesday morning. So let me widen the lens at the outset here a little bit. And let me start by saying that I would argue that Saudi Arabia is currently undergoing probably the most consequential transformation in the world. And I say consequential just because of where Saudi Arabia sits in the international community, where it sits in the broader Muslim community. I think there's an expectation among Muslim majority nations for Saudi Arabia to play a leadership role. And we have long embraced that role. At the same time, I think there's an expectation among Arab majority nations for Saudi Arabia to play a leadership role in addressing some of the challenges that the Middle East faces because of the fact that we are the Arab world's biggest economy and the only member in the group of in the G20 group of nations. There's also an expectation among oil producing as well as oil exporting nations around the world for Saudi Arabia to play a central role in making sure that oil markets are stable and adequately supplied. I think we've embraced all of these roles long ago. Now, the transformation that I'm talking about, it's already been mentioned a couple of times, is something we call Vision 2030. And for people who may not be familiar with it, simply put, Vision 2030 was unveiled by His Royal Highness the Crown Prince back in 2016. And really the broad objectives are the empowerment of every segment of Saudi society, as well as the development of every sector of the economy. We have come a very long way in a very short period of time. For instance, I mean, some of the sectors that we're very bullish on, for lack of a better term, are the mining sector. We conducted our most comprehensive geological survey last year and found that we have $2.4 trillion worth of metals and minerals that can be developed and exported. And that obviously will be generating billions of dollars to our economy. but also generating thousands of jobs. We are, as I'm sure everybody in the room here realizes, where we sit geographically is also very strategic. And because of that, we believe that we can play a very important role in connecting the global south to the global north. We are investing heavily in our communication networks, in our transportation networks, to make sure that we can promote the transfer of goods, services, and information between the global north and south. At the same time, and I don't know if I mentioned the word remarkable at the outset, but I do think that Vision 2030, the pace of the change has been remarkable. Just for one example, we have come a long way and essentially created a tourism sector from the ground up in certainly a little under 9 years. Not only is it a thriving sector, but I believe that it is the second fastest growing tourism sector in the world. Last year, we had 100 million tourism visits. Now, I do need to break down that number, but even if you remove religious tourism, 22 million people came to Saudi Arabia for non-religious tourism purposes. Now, that's a lot, and we've come a long way, and I think that trajectory is going to continue. Now, in terms of our relationship with the United States, the relationship is long-standing. It goes back 80 years. And really, not only has it endured for that long, but it's continued to grow and to deepen and to strengthen under Democratic and Republican administrations. The relationship certainly is multidimensional. It does involve significant political cooperation, ongoing political cooperation, ongoing military training, joint military training of all the various armed services. But also the economic dimension is very important. So as we speak, I think last year the total amount of goods and services traded between Saudi Arabia and the United States was close to approximately $40 billion. And that figure supports 165,000 jobs right here in the United States. I think it's also worth noting that President Trump did make Saudi Arabia his first destination when he went on his first overseas trip. And I think the president wasn't there long. He was essentially under a day. But, so much happened, and there was a number of agreements signed. There were a number of very important agreements between various official entities and agencies. We had agreements between the Ministry of Defense, the National Guard, the Ministry of Health, the Ministry of Culture, the Ministry of Energy, and those were very important. But at the same time, we had this huge investment forum in the evening of the same day where $300 billion worth of deals were announced between, again, various entities. In the private sector, artificial intelligence was a huge sector, and obviously we are investing heavily in it. We believe that it will be a game changer for many industries. But I think the fact, again, not only did the president choose Saudi Arabia as his first destination, but the president, I think, was very kind in not just speaking about our leadership and the role that Saudi Arabia plays in the Middle East and the broader Muslim world, but also I think His Excellency, the President Trump this was obviously not his first trip to Saudi Arabia. He's been there before, and he remarked on the rapid pace of change because for those of you who have been to Saudi Arabia, especially in recent years, it's visible. It's not something that, yes, these metrics, these figures are important, but it's visible change that I certainly see every time I go. I go to the kingdom 4 or 5 times a year, and every time I go, it's just the changes are there, the institutions, the new programs, the new initiatives, the young people kind of steering this transformation. You see them, they're managing everything. So that's why I said I would argue it's the most consequential transformation and also remarkable because of the pace of change of it.
Thank you, Fahd. Karen, I need to come to you right now. We've spoken about, I guess, 2 Gulf countries, and we've listened to Amin present sort of the IMF's perspective on what is happening. How does the U.S. look at this partnership, this prosperity and investment partnership? Is this specific to the current administration as a partnership? Or is it a long-term shift you observe in how businesses, government entities, analysts across industries look at the Gulf and by extension see the opportunities for promoting an investment-focused economic partnership with the Gulf countries?
Well, thank you, Tarek. It's great to be here, and thank you, Danya, for the invitation. Fantastic panel. You know, I think my central view is that the United States and the GCC states are still very much in this kind of old-fashioned energy defense relationship on a policy level, but on a market level, it's much, much more advanced, right? And so there is perhaps a bit of a lag between what is official US government policy and a view towards the Gulf and what investors and what sort of market participants are seeing as opportunity. And I think this stems from really two different strategic outlooks of where the world is changing and sort of a geopolitical view that the US has and versus what the Gulf states has, as what Fahad is describing, from a Saudi perspective, very much as a member within the G20, as a model of economic development, as a model for other emerging market economies. And right now what's happening in the United States and sort of broader concerns about resource nationalism, about concerns of industrial policy and being sure that we have the things that we need and that they can be produced at home, and in a bit of a defensive posture. And so for the Gulf states, this is a huge challenge because their motivation is to expand, to grow, to be a point of connectivity, both in terms of trade and logistics, mining, but also in new technology. And market participants, investors see that. They want to be there and are there quite actively. But from a policy standpoint, it's a harder sell. And so you still get a bit of a reactionary force, which is to say sort of a transactional view of Gulf partnerships. We've seen this a lot in announcements, particularly on artificial intelligence and the commitment of Gulf investment and sovereign investment into the United States. And I think the next step is to see how that is more connected to the rest of the world, right? So the change that Gulf states see and their opportunity set, which is often very much eastward in orientation, emerging market in orientation. The US policy community, US government, is not yet on board there because the focus is very much inward. And so that is the disconnect that we have right now. And there's not necessarily a way to fix that tomorrow, or politically maybe that's not where we will go. So the regulatory question for investors from sovereign entities in the Gulf and for partnerships with particularly US private equity investors is how long our own regulatory environment in the United States stays open and facilitates this kind of mix and transfer and co-investment opportunity. So that's why I say, on the policy front, we're still maybe a little bit in that rubric of the defense and energy cooperation, but our market participation is certainly much more, a wider aperture, a wider understanding of the opportunity that comes from the Gulf and connects the Gulf and U.S. Investors to a much, much wider opportunity set. Politics change. This is an interesting moment in the United States. And I think many, many people all over the world, but particularly in the Gulf, are looking at what's happening in U.S. energy policy. We've had a huge shift just within this administration from the last on approaches to clean tech, for example. And that was a point of interest for Gulf investment and continues to be so in their own economies. So I think that's probably the clearest illustration of difference in our different policy outlooks, in that you can see from major oil and gas producers, they are very interested in new technology, in clean energy technology. But in the United States, we're sort of shutting down some of the subsidies and the incentive structures that existed in the last administration. And so from an investor perspective, that creates a little bit of confusion. Should we invest in hydrogen in the US? Should we invest in solar in the US? Well, that landscape keeps changing. So this is going to be something that I think the job for US policymakers and for those of us that are sort of the interlocutors between markets and policy, is to try to explain where it's headed, what's the direction of travel, how can we see some consistency across administrations, and what does that mean for our kind of larger, broader strategic partnerships, particularly in new technology and in clean energy and in our traditional energy sector as well.
Thank you, Karen. I'm supposed to do a second round with the panelists, and I would love to do that. I have still a lot of questions, but I'm cognizant of time. I realize we started late, and I'm supposed to spend 20 minutes in a Q&A that invites participants here in the room. So I want to go to that, if that's okay, Dania. I think it makes sense given where we are with the discussion, and then I could perhaps add any questions to what is being asked to the panelists. We're supposed to stop at 10:40. So the floor is open. Want to ask a question or make a comment, please raise your hand, identify yourself, and pose your question either to one of the panelists or to others, and we'll try to sort of move along and build on other issues that have been raised by Karen, Amin, Fahad, and His Excellency Yusuf. So, gentlemen in the back, are these going to be written questions?
Just pass the microphone. There's a microphone.
I think we have a microphone. It's easier probably at this point.
We have a microphone for a letter.
Yeah. Justin, I see you want to come in also.
Thank you. I have horrible handwriting, so
Thank you. Very interesting discussion. Just a couple things. One thing, I didn't hear the word China at all, so I was kind of hoping to get if you can comment a little bit on how the Gulf sees China, but vis-a-vis the U.S. Gulf relationship. And secondly, if you can, I mean, you mentioned, Karen, the clean energy pullback in the U.S. and the Gulf states wanting to get involved, in the clean energy space. How do you view, the U.S. quote-unquote energy dominance agenda and how that clashes or doesn't clash or melds with the Gulf? For example, Qatar and the U.S. seemingly competing on for LNG markets, but at the same time, right, lots of areas of cooperation. And I won't get into what OPEC Plus is doing on any coordination with the Trump administration, but yeah, if you may.
Mm-hmm.
We'll take one more question from this side of the room. It was right before you, Justin. Yeah. Briefly, please.
Good morning. So I actually have two questions. One of them for Mr. Al-Jada. I suppose he's Qatari, so probably he mentioned something about the visa. In 2024, the Qataris don't need visas. I'm curious about it. But he said he didn't have time to get a visa. I'm worried about that. Number two for Dr. Young. Dr. Young, is it a U.S. thing only related to the renewable energy, or it's an international trend? Green energy needs to be more R&D'd, as I think, because we're paying a lot for results that are a little bit less than return on investment. So is it only related to the change in policies and administrations, or it's about the whole trend in the whole world changing towards going back a little bit towards hybrid things between new and old types of energy? Thank you.
Thank you. I can confirm that His Excellency Yusuf Jeda did not mention visa as the issue. You may have. I can confirm because I was listening to him directly. So we'll focus on the first two questions. Please prepare any further questions. I'm going to go to the panelists right now. There are two broad issues that have been raised. China. Where does China fit in this? I think Karen alluded to the eastward focus of the GCC's economic and trade relationships. This is about the East, but it's specifically about China. So perhaps Karen can come in first, speak about this. We'll see who else wants to address it. We also heard a question about regulatory standards. So as you begin to fragment the relationship perhaps between the East and West or between China and the US, how do you ensure that there is harmonization? How do you ensure that you don't have too much fragmentation as you're thinking of payment systems or CBDCs or other digital areas of cooperation? I mean, we'll come to you on this if you don't mind. But let's start with you, Karen, on China.
It's a great question. You're exactly right. I mean, this is what I was trying to allude to. There's lots of ways of thinking about, how the Gulf states approach a strategic relationship with the United States, which from an American perspective is also couched in this term of the us versus them and the competition with China. And I think the Gulf states don't really see it that way because they are much more open to, as I was saying, like an emerging market perspective and kind of being a model for economic development. And so you can think of it as the hedging, but I think it's actually broader than that. I think it's about really preparing for a global economy that is fragmented, but that it is growing at different paces in different geographies, but being prepared to enter those markets. And I think the roadblock or the potential difficulty that everyone faces, not just Gulf sovereign investment vehicles, but any sort of investment vehicle, is wondering how the United States and its sort of stewardship of global markets, if that continues, right? Because that's still kind of the juice that makes all of this work. So that is a huge question, and it kind of links to this other question in terms of where we are on energy policy in the United States and how that signals to other countries, what comes next. I'm not sure I fully understood the question, but it seemed to be about like cost effectiveness and sort of the nature of next generation technology and clean energy. And you're right in that what we're seeing, particularly in the hydrogen space, is that there's more and more of a view of using like blue hydrogen rather than green hydrogen. So using a little bit of gas in preparation or production of these materials. Okay, great, that's fine. But there's one thing that we do know for sure is that the cost of solar panels, for example, are super, super cheap. So, we have this mentality in the United States right now that renewable energy is somewhat to blame for rising cost of electricity. And that's not correct, right? And if you look anywhere else in the world, particularly in Saudi Arabia, where there's a huge growth in the installation of solar power generation, it's because it's cost effective, right? It is cost competitive. That's why it's a good idea to build it. And so, this is what is going to play out in interesting ways, and why I think, market participants are more interested in this space is because you have the ability to then build out solar power generation, wind generation, mixed-use facilities across the developing world. But if the United States as a policy priority isn't also engaged in that on the financing end, or even on the ability to supply the materials for these plants, we're not aligned right now on that, right? And we certainly could be, and that's a policy choice. My question is the openness of the US system to external investment, particularly across our energy sector. A lot of what's happening from Gulf sovereign investment in the US is actually in gas. It's in our refining sector. And gas in the US is going to be big. We're going to compete with Qatar. We do compete with Qatar in this sector. And Qatar is an investor in the United States in our gas. So, as long as our regulatory frameworks remain open to foreign ownership and to co-investment, that works. If we continue on the path of resource nationalism and being, very, very worried about reliance on external partners, either for financing or for supply, then that calculation changes, and the whole sort of undergirding of open markets that the U.S. has supported for 100 years becomes more questionable. So when I was talking about the direction of travel and sort of signaling on a policy perspective, those are the big question marks in my mind.
Thank you. Fahad, do you want to come in on China?
Sure. So, I mean, China is our biggest trading partner. It's a very important relationship for us. It is also one of our biggest customers of crude. And so China cannot be ignored, and really China should not be ignored. We believe that, for lack of a better term, that pie is big enough to go around. And as Karen said, we are cultivating relationships with not just countries, but entire regions, especially in the past few years. So for instance, we came to the realization, I'd say 5 years ago, that there was a lot of potential to be explored in our relationships with the African nations, with the Caribbean nations in Latin America. So the fact that we are strengthening relations with China or India or other countries, I think this is an important point, is not coming at the expense of long-lasting relations with other nations. We don't view the way that we conduct our foreign policy, our foreign relations, our relations in general is not through it's not a zero-sum game for us. And like I said, the relationship with China is important. We have sizable investments in China's energy sector. There's Chinese construction companies doing and helping develop and build some of the big projects that we have currently happening in Saudi Arabia. Now, on the issue of sustainable development, if I could just add, Saudi Arabia is committed to sustainable development. Back in 2019, we announced something we call Saudi Green Initiative. And it's basically a series of programs and initiatives that are focused on addressing climate change. Part of it is investing heavily in renewable energy, as Karen said. I think we are probably, and please correct me, Karen, if I'm mistaken here, but I think we're probably adding the most renewable capacity on an annual basis anywhere around the world, certainly when it comes to solar, but we're adding significant wind power as well. The world's biggest green hydrogen plant is being built in Neom as we speak. So this is something that we're committed to. At the same time, we've adopted something called the circular carbon economy, because let's face it, we are going to continue. There's obviously the global demand for hydrocarbons continues. By all projections, that is expected to remain steady. So we will continue to provide that source of energy because, again, the demand is there, but we're going to try to make sure that it's as clean as possible. So the circular carbon economy basically has 4 R's. I usually forget one of them, but it involves reducing, reusing, recycling, and removing carbon emissions. And my apologies if I repeated one of those twice. But we're kind of moving on 2 tracks. But sustainable development is something that we're very committed to. And just as a final example, NEOM, which is possibly the biggest giga project we have underway, the entire project is going to be powered by renewable energy exclusively.
Thank you. Yusuf, if I may come to you on the question of regulatory standards and how to ensure harmonization moving forward when we see clearly growing fragmentation within the international financial system and between countries, large trading partners. How does Qatar's financial center ensure that it could meet the standards of everyone that does business with Qatar, everyone that Qatar wants to do business with in the coming period?
Yeah, thank you for that, Dr. Tariq. Can you hear me?
Yes.
Sound is okay? Okay. So definitely there's fragmentation in terms of regulation. I mean, most multinational corporations who come into the GCC and invest capital usually run into some regulatory burdens depending on what sector they're invested in. We've seen some jurisdictions easier than others. Qatar, once upon a time, used to be a very difficult jurisdiction to do business in. I mean, you look 15 years back, you needed a local partner. There were restrictions on, movement of labor. Of course, all of that has changed before the World Cup 2022. So there's been massive reforms. And one of the major reforms that came into the Qatari economy early on was, the Qatar Financial Center. And what we provide to international investors is a regulatory environment based on English common law. So we have put together this entire infrastructure called the Qatar Financial Center, which has a registry based on English common law, which means you can have 100% foreign ownership. We have a regulator, a financial services regulator covering banking, insurance, and asset management, also in accordance with international best practice and under the English common law system. We've established a court system, also independent from mainland, called the Qatar International Court. You have judges from all over the world, 10 judges. There's 2 American judges, a UK judge, judges from Australia, India, Qatari judges as well. But basically, companies can dispute under English common law in that court system. So we've created a parallel legal and regulatory environment to allow international investments to flow in easily, swiftly, efficiently, without any burden. So that's where we come in. And today, it's October 2025. We started in 2005. We're celebrating our 20th year anniversary. We have more than 3,000 companies. 15% of our companies are from the US. I mean, all the law firms in the US are established in the financial center. They operate under English common law. All the consultants, including the Big Four consultants, all the investment banks from the US, whether it's Goldman Sachs, JP Morgan, Morgan Stanley, they all operate under the financial center. So, we've tried to create something in parallel to ease up the regulatory environment for international companies to do business here and springboard into the rest of the region. And what we've done also is we've tried to sign mutual recognition framework with other regulatory jurisdictions to ease, trade and financial transactions with other jurisdictions. So, we kind of created this, reverse engineered it, and here we are today with more than 3,000 companies. We have more than $30 billion of assets under management. And we continue to innovate as we see. Whatever becomes a burden in the local economy, try to innovate through the QFC laboratory, if you will, to enable business as much as possible.
Thank you. Amin, I feel the need to come to you on the same question very briefly.
I'll come to that, and I'll add a bit, and I'll finish on this. So, Karen and Justin probably already heard me talk about this in the past, but let's make sure when we talk about the GCC economies and the vision, why did the countries go that? And the regulatory environment is part of that. There was a lot of simplification of the doing business. There's a lot of structural reforms. Saudi Arabia, we talk Vision 2030, meant also changing the bankruptcy law, the commercial transactions law, the investment code that gives more legal certainty for domestic investors and foreign investors when they operate. All of those were there to try to facilitate foreign investment coming in. Foreign investment has grown. In Saudi Arabia, it has grown. It's not yet there in terms of the target. Vision 2030 target is 5.7% of GDP by 2030. We're still at below 2%. But the progress is there, and it's happening through these structural reforms. And my message is that today, at $61, oil price is lower than what it is. These structural reforms need to continue for that non-oil growth and performance of GCC to continue, including to get FDI from the US or FDI from other countries. And Karen was right, a lot of the FDI, a lot of the transactions that we're seeing are happening in the energy sector. So all of that will need to happen. In terms of reforms, when we talk about the regulatory environment, when you invest in Saudi Arabia or UAE, you still have quite a lot of different rules. And in the financial sector, why not have a capital market union, more financial sector, meaning having one regulator that will simplify the rules for investors that are coming in. Saudi Arabia, in terms of foreign investors, now is thinking about opening foreign ownership in the equity market so that you can own more than 49%. So those are part of the rules that would help increase some of the investment. Taking on the question on China and others, I think a lot of, at the end, in a lot of these visions, where is the goal? Is to try to diversify, try to increase non-oil exports. Yeah, in China now there's a lot of crude oil, but in other countries, there's, GCC Africa is $100 billion. You have GCC CCA, you have GCC other countries where there's quite a lot of trade happening. There's a lot of trade agreements. I think in terms of regulatory, there's also a lot that needs to be done on non-tariff barriers to try to simplify. You talked to me about payment systems across, and of course you need to simplify, and I think you had in mind more some of the new transactions on crypto and others. And on these, I think, frankly, yes, they can facilitate payment, and they could help in terms of transaction, but you also have to remember the risks to macroeconomic stability. You have to monetary stability. You have financial stability. You have financial integrity. You have consumer protection. All of the rules need to be there to try to protect society. And I think there's a lot in the IMF that is being done. I think we had a paper 2 years ago about crypto assets and some principles that will be there in terms of looking at fiscal risk and financial stability. I think these norms are still valid. And I think while looking at this, and I think, we were at GCC ministerial meeting in Kuwait 10 days ago. I think a lot of the policymakers are looking at this and looking at, what type of regulations, what are of risks are coming from this, and how to make sure that the financial systems remain protected.
We'll have room probably for 1 or 2 questions at most. Justin.
Justin always has a question.
Can somebody bring the mic here, please?
Speak out or?
I think the mic is coming. I don't know why it's... Here.
Thank you.
Briefly, Justin, if you don't mind.
Briefly, of course. So it's 5 months now since President Trump's visit to the Gulf, which Fahad mentioned. Some very grand plans for imports and partnerships and investments were announced then. I'd be interested to hear what people's views are about how successfully those are being implemented now, and particularly for Saudi Arabia, how the tension is managed between Saudi Arabia's need to import capital to finance its vision, which, as Fahad said, is really very transformative, with its capacity to invest abroad. For the Gulf in general, specifically Saudi Arabia. Thank you.
5 months after the visit. One more question. We'll go to this side of the room. Okay. Yeah.
Hello, my name is Hala Al-Azzi. I'm here as an intern with the Embassy of Iraq, and I'm a current student at GW. My question was to the point about critical minerals and Saudi Arabia. It's very significant to note that the United States is moving towards critical minerals because of its rivalry with China. The reason that they're motivated to Saudi Arabia and other economies for critical mineral mining and manufacturing is because they want to prevent China from being the top producer and the monopolizer of critical minerals. Is Saudi Arabia, do they have concerns about whether the US will reconcile its relations with China? And because this fear of them being the top producer of critical minerals is fairly recent, just within the last 2 years, is Saudi Arabia not concerned that once, potentially in the future, China and the United States may reconcile and the United States isn't concerned about China being a top producer of critical minerals because they've never had this concern before, that they will abandon their investments and their efforts into Saudi Arabia's critical mineral mining efforts?
Great.
Thank
you very much. I think each one of you can take up the 2 questions and use the opportunity also to make some closing remarks, some final thoughts based on everything we've heard so far. 5 months after the visit, what do we see happening in the relationship with each of the Gulf countries, or the Gulf countries as a whole? And how does the emergence of critical minerals as an arena for rivalry between China and the US affect potentially this partnership with everything else that has been said? We'll start again with the order. We'll start with you, Amin.
All right. On Saudi Arabia 5 months after, I think we have to look at it in terms of where we are today in the global economy, right? You had uncertainty. You have all of these tariff uncertainty being there. GCC and Saudi Arabia in general have been quite resilient. I think the impact of the tariffs have really had very limited direct impact, including because oil products are exempted. If you look at, in terms of the investments and the plans under Vision 2030, my understanding is that a lot of those investments are already part of Vision 2030. They are included, if you look at our framework in terms of where we are seeing the economy. We have the current account that's moving into a deficit. We have the growth or non-oil growth that is still rising because of these investments and because some of the imports of intermediate goods or capital goods are there necessary to support the investment and support non-oil growth. That is part of the framework. There's also a recalibration or reprioritization of these projects that has happened in Saudi Arabia, as you know. That is also part of the exercise to remove any overheating risks. And this is, I talk about this because you talk about the investment and the announcements. I'm looking at this more as part of Vision 2030 reform plans ongoing. And there may have been some recalibration, but the ultimate goal is to still try to move towards diversifying the economy. On the rare earth, yeah, sure, this is something that will be a new resource that will be used. There's a lot of technology advance, a lot of, when we talk about, there's a comparative advantage in the GCC on energy, which is helping with AI data centers. If we look about technology, I talk about AI, could bring 2-3 percentage points a year in new growth, could be a new opportunity. You also have to be careful about how it affects labor. All of those are new technologies that could bring in higher growth, but you have to be careful that underlying that, the reform agenda and the structural reforms are still continuing. If there's, we didn't really talk a lot about, it was hinted at when we talked about clean energy and others, that industrial policy. So industrial policy, means that you could choose one industry and others. And my caveat is, let's make sure that we have the right reforms that are undertaken. And this is why I believe what has made major progress in the GCC economies, why we're seeing that non-oil growth, is that a lot of that structural reform, transformational agenda is there. And it's not just picking winners and choosing industry through industrial policy, even though technology will bring us there. And I'll finish here in terms of technology on the GCC. They are quite advanced. Fahad can talk about digitalization in Saudi Arabia, but in terms of preparedness for AI, for example, we have done some work, and here for the GCC economies, they're actually doing much better than emerging markets and closer to advanced economies on digital infrastructure, digital innovation, regulatory environment, and human capital is what's going to be needed, and more of that. Thank you.
Thank you, Amin. Yusuf, we come to you with the same question. 5 months after the visit, and thinking about rare earth minerals. I know that's outside of the mandate of QFC, but there might be other arenas of competition between the US and China that might affect GCC entities, GCC governments, and priorities.
Yeah, so listen, the politics between the US and Qatar in particular, and the GCC in general, have never been better. There's been massive commitments, as we've seen, by GCC governments. I think we need to connect basically co-funds, enhance technology joint ventures, work on SME investment frameworks, regulatory sandbox, talent pipelines, And, it's our mission in the Qatar Financial Center to anchor some of these investments. I believe if we do anchor these investments under a solid, efficient, transparent regulatory environment, then we can definitely compress time to scale for US and Qatari innovators and hardwire resilience into our economies. I think that's how we want to move in Qatar. We want to move quick and swift. We want to move from energy strength to an innovation engine. And I think the timing couldn't be better, especially, given the visit of President Trump, peace deal in the Middle East. I think it's time to bring some of those investments back home into the GCC to develop and reform our economies.
Thank you, Yusuf. Fahad, we come to you now.
Right, so 5 months after the visit, and as I mentioned in my opening remarks, I really do think that U.S.-Saudi relations are and have always been mutually beneficial. And, the 12 hours or so that the president was in the kingdom really underscored the breadth and the depth of the relationship. And like I said, there was a number of announcements made, both on the government and also on the private sector side. Maybe one of the biggest deals or the biggest announcement was the NVIDIA and Humane chips deal. And that would obviously benefit both companies and both nations. But at the same time, there was another announcement made by, I believe the Saudi company's name is Data Corp, that has plans to open a data center right here in the United States. And that's just one of many examples that really kind of underscores the fact that this relationship has always been, like I said, mutually beneficial. The conversations about the depth and the breadth are also ongoing. So like Karen said, I think that defense cooperation and political cooperation is still very critical to the relationship, but we've expanded beyond that. So whether we're working on things like supply chain resiliency, cybersecurity, space exploration, these are all new dimensions of the relationship that really kind of underscore just the fact that it's ever evolving. And how can it not be? I mean, the world that we live in is constantly shifting. The economy, the global economy has shifted. And really, as far as we're concerned, we are looking for partnerships. We're looking to not only strengthen long-standing partnerships that we have, as is the case with the United States, but we're looking all over the world. I mean, there's opportunities everywhere. And like I said earlier, that we believe that the pie is big enough to go around. And I already addressed the issue of supply chain resilience, but I think we, and by me I mean by the human race, the international community, I think we all learned many hard lessons during the pandemic, and I think none so more than the fact that we do need our supply chains to be diversified. And again, the survey that we conducted last year certainly showed a lot of promise. And we will invest and explore every opportunity possible, especially in terms of the resources that we have in the kingdom.
Thank you. Final word to you, Karen.
Okay, I'll be quick. I would just say on the mining, we could all dig in our backyards for the next 20 years, and we still wouldn't have enough, right? So don't worry. If we make friends with China, there still would be significant demand for critical minerals that our global economy is going to need. So I don't think that's going to be any danger for the Saudi project. The problem is it just takes about 20 years to start a mine to get it to production, and then you need the processing and the manufacturing. So it takes a lot of money, a lot of time, a lot of water, a lot of electricity. So those are the challenges, both what we'll try to do here in the United States, what will happen perhaps in sub-Saharan Africa, and what we can see happen in the kingdom. To Justin's question, very, very good one, what's happened 5 months on. I think there is real frustration, particularly also from the UAE, but also Saudi Arabia, on the delivery of some of these commitments, particularly in chips. And so that's something to be worked out. And again, this comes back to sort of what is the direction of travel within US policy. And it still is industrial policy, whether it's on high technology or it's on mining or on fossil fuels. All of these things are about how the US economy wants to be engaged and open with the rest of the world. And as we see more and more restrictions and a sense of resource nationalism and protectionism within our own economy, it will put stress points on all of these relationships.
Thank you. I don't know about you, but I've learned a lot from in the last 70 minutes, listening to our four distinguished panelists. I've taken a lot of notes. I must admit, a sense of optimism in this room and on this panel is something I did not prepare for. Just landed from the region last night, and I'm carrying a lot of residue from discussions on geopolitics, security, the peace deal, and a lot of uncertainty still in the region. But to identify, as Dania has rightly done, a niche here, an area of cooperation focused on prosperity, on investment, on forward-looking policy cooperation between the US and the Gulf countries, and to see how much at least optimism or at least neutral, cautious sentiment expressed, I think is a big plus and something that I will share back when I head back to the region. And certainly a lot of food for thought on the specific challenges that our panelists had outlined, the specific maybe even risks that had been marked, but more importantly, the opportunities here for the US and the Gulf countries in the coming period. Thank you again to our panelists for participating with us, for Yusuf joining us from Qatar, and thanks to all of you for being a part of the discussion today. Thank you. Thank you.
Ryan.
Seated, that's fine. I think so. Yeah. يا سيد ويا سيدات اجلس من فضلك. Ladies and gentlemen, if you could please resume your seat. We're a little bit behind schedule here and we got to get moving. Yeah, that's right. You know, they say in the U.S. Congress, it says, in God we trust, but above that is the clock. Time and tide wait for no man. If you could please take your seat. The remorseless march of time. Whilst we're taking our seats, ladies and gentlemen, I want to just highlight an important unknown fact about Washington. When you leave the building, if you turn right, cross the street, kitty corner is the newest national monument in Washington, the National World War I Monument. It opened during COVID, so most people don't know about it. It's a large-scale bas-relief depicting the hero's progress. It's a common theme from all the way from the Odyssey to the modern age. It is the newest public sculpture in Washington. It's quite impressive. It was 15 years in the making. I urge you to do it. Once again, we're going to get back on schedule here. We had a slight interruption with a technical or with a video presentation. So I'm going to welcome back to the podium our Executive Director, Dr. Thafer, to introduce our video clip, and then we'll go into Omar Rahman's panel. So first, let me welcome back Dr. Danya Thafer.
Thank you. Okay. Well, for me, this is a particularly important introduction. Unfortunately, Her Excellency couldn't make it last minute, but she sent over a video to give remarks for our conference. And as you know, that my work and my research focuses on innovation-led development in the Gulf, so I'm very excited to welcome Her Excellency Dima Al-Yahya. Dima Al-Yahya is a digital and innovation leader and a long-standing champion of digital inclusion, particularly for women, young people, and entrepreneurs. She is the first Secretary General of the Digital Cooperation Organization, an intergovernmental organization established in 2022 to work towards a world in which every country, business, and person has a fair opportunity to prosper in the global digital economy. She works directly with heads of state, governments, ministers, and digital economy leaders to promote the inclusive development of the digital economy, focusing on global initiatives with real-world impact. Secretary General Al-Yahya has spent nearly 20 years building tech communities in the United States and across the Middle East. She's a trailblazer for Saudi women in tech. Secretary General Yahya began her career as a developer, and she quickly demonstrated her ability to build public sector centers of innovation from the ground up. On the private sector side, she has served as Chief of Innovation Evangelist at Microsoft, responsible for expanding the developer ecosystem and empowering youth, women, and independent software vendors. She holds a bachelor's in computer science and information systems from King Saud University and has attended and gotten different degrees from Harvard Business School. With a distinct pleasure, I'm so happy and pleased to welcome Her Excellency, who serves as a role model for women across the Gulf. And without further ado, she will give her remarks now.
Excellencies, esteemed colleagues and friends, it is an honor to address you today, and I extend my heartfelt thanks to the Gulf International Forum for the kind invitation. I regret that I can't be with you in Washington, but I wish you a productive conference. From the Gulf's deserts that once lit the world with energy, it is now shaping a future powered by innovation. The Gulf's nations stand at a defining moment where the digital economy presents itself as a golden opportunity to diversify resources, to strengthen resilience, and to secure prosperity that endures beyond volatility. Across the Gulf, the digital economy is rapidly growing. Deeper regional integration could generate over 600,000 new jobs and add $255 billion to the Gulf collective GDP by 2030. These numbers objectively represent the foundations of economic prosperity and sovereignty in the digital age. Today, the Gulf's 50 submarine cables, AI networks, and data centers are as vital as ports and airports. Every disruption threatens not only connectivity, but also economy, security, and the global competitiveness. In this new era, resilience is the new energy, and cooperation is the new security. Ladies and gentlemen, at the DCO, we are reshaping multilateralism by reimagining a model of cooperation for the digital age. One where governments, private sector, academia, and civil society work side by side, where innovation replaces isolation and collective progress replaces zero-sum competition. This vision demands orchestrated and collective action. Policymakers must harmonize digital frameworks. Diplomats must turn political dialogues into digital corridors. And scholars must guide decisions with unified metrics and evidence. Media must counter disinformation with truth, and businesses must invest in innovation that empowers people, regardless of their gender, nationality, or geographic location. And I invite each of you, leaders, thinkers, and partners, to work with us at the DCO. Because without digital cooperation, the Gulf's progress and the world's stability risk fragmentation. But together, we can face the challenge of digital age through multilateralism to build a world where every nation has a voice, every young person has a chance, and every byte of data becomes a building block for peace and prosperity. Thank you, and I wish you all a successful and inspiring forum.
And thank you. I got to tell you that if you ever train public speaking, that would be a good example of how to use gestures to enhance, not to detract from your message. That was very impressive. We now turn to our second panel session, focusing on the Gulf states' economic transformations and domestic innovation strategies. Please join me in welcoming our moderator, Mr. Omar Rahman, who is a fellow at the Middle East Council on Global Affairs, who will lead our next panel. If the panel will go up and sit here. Once again, we welcome questions once the panelists have done with their presentation, but please, questions. Thank you. Omar, the floor is yours.
Thank you, Dave. Is this on? Yep. Thank you for that introduction. As he said, my name is Omar Rahman. I'm a fellow at the Middle East Council on Global Affairs, which is a long-standing partner of the Gulf International Forum. And this has been a few consecutive years now, joining both as a panelist and as a speaker. So I'm glad to be with you. I see a lot of cherished friends and colleagues in the audience. We have a few rounds of questions, and we're going to try to be as concise as possible, keep everybody to, let's say, 5 minutes. We're 3 panelists, one less than last time, so hopefully we get through quicker. And we have Dr. Christian Ulrichsen online. I'm a little less agile and adept than my colleague, Dr. Tarek, but I try to rule with an iron fist, so we're going to keep it. I've learned one valuable, sacred lesson when you're moderating, and that's don't keep the audience from lunch. And we have another, I think, set of speakers before then, so let's try to get to it as quickly as possible. The topic for this panel is From Dependence to Domestic Engines, New Economic Pathways for GCC Growth. So, of course, there's some overlap with the previous panel. I think we're going to dispense a little bit with the U.S. Gulf relationship a bit and try to dig deeper into those issues that we were digging in last time. Again, a few rounds of questions, and I'm privileged to be joined by this distinguished panel. First, again, online, we have Dr. Christian Coates Ulrichsen, who's a fellow at the Baker Institute at Rice University in Houston, where he's also the co-director of the Institute's Middle East Energy Roundtable and very accomplished author on the GCC. To my right, I have Dr. Amin Mohseni, a non-resident fellow at the GIF and an economist who has worked across several divisions of the World Bank. And I think we're going to tap your knowledge on that for this. And to his right, Dr. Justin Alexander, the director of Khalij Economics, which is a consultancy dedicated to understanding the GCC and its role in the world. So let me start with Dr. Ulrichsen. You just had your most recent book just came out, Kingdom of Football, if I'm not mistaken, on Saudi's role. So I want to focus on that. Is that your U.S. title as well? Should it be
yes,
Kingdom of Soccer?
Yes.
No.
Kingdom of Football, and then we have how Saudi Arabia and the remaking of world soccer. So we get both.
Okay.
Both in the title.
Beautiful. I thought there might be some confusion. Saudis entering the NFL, trying to buy a team or something.
It's coming.
Yeah, I mean, we've seen an explosion of investment, obviously in football and golf from Saudi, from Qatar hosting the World Cup, and really I think most of the Gulf states are invested in some way or form in sports. So to what extent can mega sports and cultural events be more than just image builders? I mean, we see that component to this in terms of, creating a different image of the Gulf's place in the world and how it engages. But I mean, more as I say, a sustainable economic driver through tourism, through media, through infrastructure, urban regeneration, talent development. I mean, how do you see that going?
Well, first of all, thank you very much for having me, and I'm sorry I can't be with you in person. I'm actually in Doha, in Qatar, so it's great to be with you virtually. First of all, sport is very effective at image changing. I mean, that's part of the whole sports washing narrative, even though I don't think it really is fair. You could argue that the Saudi win over Argentina at the World Cup in 2022 did more for Saudi soft power than anything the Saudi authorities could have done. The image of young Saudis celebrating, having fun, being as football obsessed as anyone else just spoke volumes. And it was all spontaneous, organic, genuine. It wasn't contrived, it wasn't top down, it was purely bottom up. So it was incredibly successful. And there's been a huge investment, by the way, also in basketball from the Gulf states, especially from the UAE. Dubai just played their first game in the EuroLeague 2 years after the team was formed. Their Final Four was held in Abu Dhabi this past year. Qatar is holding the World Cup in basketball in 2 years from now. So there's a lot of stuff going on in basketball too. Sports so far has been more of an indirect driver in the sense of drawing attention to wider economic and maybe even social changes taking place across the Gulf, raising the profile of the Gulf as a destination, creating hubs around which the infrastructure of tourism has developed. Obviously here in Doha, where there was huge investment in hotel building, in the infrastructure of the city for the decade-long preparation for the World Cup, which is still here. It's clearly going to be utilized for other events. We have the Arab Cup coming up in soccer in the next month. That said, it has been hard to ensure a steady pipeline of events, especially events on the scale of a World Cup that will utilize all of the infrastructure. That may be less of an issue in states or in places like Dubai or Abu Dhabi, where there is already a much greater footfall of visitors for other reasons, for sort of mass tourism in Dubai's case. But certainly in the case in Qatar and perhaps in Saudi Arabia, as they develop their infrastructure ahead of the World Cup in 2034, it might be harder to continue to fill the sort of all the venues, the hotels, everything with continuous supplies of visitors. That said, there has been investment in localization of supply chains, of talent bases. It was interesting, we saw the Qatar Stars League at the turn of this century also do what the Saudis have done over the past couple of years, bring in big-name soccer players from all over the world for the last couple of years of their career, but then quickly pivot to focusing on hosting, which has been incredibly successful for the Qataris. And I would imagine that maybe the Saudi Pro League might begin to do the same, especially with the decade-long run-up to the World Cup, the Asian Cup in 2027. So I think that the jury is still out. It'll be a long-term project. Over time, I think they hope that investment in sport will generate greater tourism. In Qatar's case, numbers are up since the World Cup. So I think that's the plan, and it seems to be going very well, at least so far.
Great, thank you for that. Let me turn to you, Dr. Amin. And let's widen the lens a little bit. Obviously, that was a very pointed question, but what practical steps are being taken or should be taken in the Gulf to diversify away from fossil fuels and foster new economic pathways for the GCC countries?
All right, thank you. Excuse me. Omar, for that question, and thank you, Dr. Dania and GIF for the invitation. So this year's Economic Nobel Prize went to 3 economists just 2 days ago that worked on innovation-led growth and arguing that growth should not be taken for granted, and there should be continuous, as we say, creative destruction happening in economies for growth to continue to happen in the future. So this is true also for the Gulf region. So I want to answer your question in 4 different categories and buckets, if you may. One is the renewable energy. We have, the previous session also talked about this, and probably it's going to come up several more times in today's event. So over the past 5 years, $42.5 billion have been invested in renewable energy in the Gulf region. Still, that is 12% of the ambitious 165 gigawatt by 2030. So much more needs to be done to reach that goal. Specifically, by 2030, we need an additional $60 billion of investment needs to happen. So, and every country in the Gulf, again, we're talking about the GCC countries, sometimes we fall into this trap that they are homogeneous countries with homogeneous economies, but they are not. They are different in size and scale and also their ambitions. So Saudi Arabia aims for 50% renewable by 2030. UAE aims by 30%, both renewable and nuclear mixed by 2031. Qatar, Oman, Kuwait, and Bahrain, they have different ranges ranging from 15% to 30%. So, and the region has a lot of potential in wind and solar. We know that. So that's one area that the region has seized the opportunity to move away from fossil fuel producing nations to next phase of energy in the global economy. But again, much more can be done, and I'm hopeful that they are moving into that direction. The other one is, of course, the artificial intelligence. The background shows that here, and digital infrastructure. Again, the region is going very strongly on these fronts. UAE's strategy 2031 and Saudi Arabia's data and AI authority, for example, are examples of setting up the regulatory environment for the region to move into this direction. We also know, for example, the UAE is building the largest data center outside of the US, 5 gigawatts worth of data center, and so forth. So, and the recent President Trump's trip to the region, we see the executives coming from US industry the number of people on the AI and digital front exceeded probably other industries in that visit. So that is also a very strong move by the GCC economies, especially UAE and Saudi Arabia. The bottleneck, I think, in that sector is not the investment. The money is there, definitely. The interest is there, is the human capital. In the whole region, I was looking at the numbers as of yesterday. There's only around 12,000 AI experts, specialists, and in order to fuel the rising sector, this rising sector in the region, we need more of that happening, and that goes to the idea of education, but I think it's going to be addressed again later on. The issue of critical minerals came up. That's the third bucket I want to address, and rare earth. And again, we know about China's dominance in this region, in this area, somewhere between 60% to 90%, depending on what we are talking about, like wind turbines, it's around 63%, solar 80%. Some of the minerals, China is monopoly, 100% is coming from China. But again, it's not, and as Karen mentioned very rightfully, the demand is magnificent. And it's not only, and as an economist, we always like, diversify supply chains. We don't like monopolies. It's good for the world economy. It's good for the Chinese companies as well to compete in the global economy. They become more efficient. And it's good for the consumers. So with Saudi Arabia, UAE, and other GCC countries going strong again in critical mineral investment, it's good news for the global economy and so on, and also for these economies. And the demand is going to be there moving to the future. And I think the latest numbers is $20 billion investments already in Africa, Canada, Australia, and also Central Asian countries. And in the previous panel, it was mentioned that Saudi Arabia has $2.4 trillion worth of untapped natural reserves for critical earth minerals, which is a huge, again, opportunity for Saudi Arabia to seize the opportunity. And the last bucket I want to mention is the macroeconomics. Given that these countries have been traditionally dependent on fossil fuel revenues, taxation has been very low, taxation capacity has been very low. Some of the countries in the regions, again, Saudi Arabia is an example, they are taking important steps in increasing their tax revenues, but again, much more needs to be done in that front in order to be able to shift away from fossil fuel revenues, and also depend on the private sector growth, which leads to tax revenues moving to the future. I'll stop right there, and I have probably some more comments on the macroeconomics later on. Yes.
Let me quickly follow up actually on, sure, especially on the AI point of view, because you mentioned the bottlenecks of human capital. Yeah. And I think in the previous panel, Karen mentioned that there was some frustration after Trump's visit for NVIDIA's technology or chips to arrive in the region. I think Justin asked that question. So I mean, how hamstrung by these bottlenecks do you think this diversification project into AI is?
I think human capital is a huge issue. As an academician, we always value that ideologically, of course, but also practically. And I think Qatar is making a huge inroad in this with the education city, and also moving into this education in the next generation of experts. But the region has to become very serious in training regional experts. Of course, expats are there, they can always come in. But for creating the jobs necessary, that was my next point I forgot to mention actually. Every year there is a need of 1 million new jobs that needs to be created in the region as a whole. So there are 1 million new entrants into the job market. And of course the public sector does not have the capacity to absorb all of these new entrants. So the only solution will be the private sector. And the private sector is moving towards the digital economy, the AI, the fintech. And that's where their demand is, mm-hmm, right? So the region has to train the experts, these 1 million experts, into those fields, so that when they are graduating with degrees in technology and AI and fintech, they can be absorbed into the region's market. So I think, again, Saudi Arabia and Qatar, I know by experience, they are doing a lot in this front. Yeah. And I think other countries also should follow suit.
Obviously, education is a very important component, but definitely, it takes a long time and a long-term investment. Yes, yes. But attracting, I think, talent is another component to that. Turning to you, Justin, through the lens of economic diversification, I mean, what structural shifts in industrial policy, technology adoption, in high-value sectors, I think, would most redefine GCC economies in the next decade, in your opinion?
So there have been some significant shifts that have already happened in the last... so is my microphone coming on? Is that...
I think they seem right.
Okay. Some really important shifts that have happened in preparing the business environment over the last 5 or 10 years for innovation and development. We've seen this particularly in Saudi Vision 2030, but also in other countries' plans, making it much easier to start companies, raise capital, access to financing for SMEs. So all of these things. So traditionally in the region, diversification and development has been state-led, and that's still heavily the case, but there is more scope for the private sector, and kind of a composite between the private sector and the public sector. And we see this with some of the sovereign wealth funds, some of the partnerships also with US companies. And I think we've talked about artificial intelligence a bit, and that's going to come up a lot. I think that's a really interesting sector. It's one that wasn't really discussed in the Gulf until a couple of years ago, maybe not widely. It's emerged very rapidly. But the Gulf is incredibly well suited to AI. And they're taking it very seriously. I think there are mainly kind of 5 things you need to implement AI effectively. So you need capital. We've got lots of that in the Gulf, obviously. You need cheap and reliable energy. We have that, not just hydrocarbons. We've got renewables, nuclear power in the UAE. That's creating an environment for that. You need a good regulatory environment, access to land and other resources. Again, that's all much easier to do in the GCC than anywhere else. In my hometown, St. Louis, here in the US, there are massive battles over building new data centers. That's being played out in other places. I know here in northern Virginia, near DC, there's a lot of data centers. It's just getting the land, concerns about the impact on the local energy market. Those aren't really issues in the GCC. Then you need talent. And Amin, you mentioned this. The Gulf states are working hard on education, and including in AI. The UAE has a specific syllabus for all of its, I think it's maybe as low as kind of sort of kindergarten children and train them in AI. Saudi Arabia doing similar. I think others have plans. They're very digitally literate societies, so they are developing those skills domestically, but they're also working to attract talent. And if you look at some of the indices of talent attractiveness, I wrote a paper for the Gulf Research Centre on this last year. Saudi Arabia, the UAE rank very, very highly, and you see this in terms of the flow of, for example, if you look at LinkedIn profiles and you see people with high qualifications who've changed countries in the last year, very high net inflows into the Gulf. And that includes a wide range of things, but also, I mean, AI is within that. So they have the ability to track the talent. And then the last thing you need technology. And although the Gulf states are trying to develop their own, and you see this in some of the large language models that have been developed domestically, really they need to import that and do partnerships, and that's where the relationship with the US is so critical. And although there has been the rollout of some of the partnerships that were announced in May, including supply of AI chips, have been slower than expected. Those are now happening, and just in the last week or so, there have been announcements. G42 in Abu Dhabi announced that they're planning on producing the first 200 megawatts of their AI data center campus next year, and they're targeting 5 gigawatts in total. So that was looking specifically at the frame of AI, but more broadly in other sectors, the Gulf states have a lot of the capital, the business environment, the talent attractiveness to encourage innovation.
Just to again follow up very briefly, a lot of the focus is on Saudi Arabia, on Qatar, on the UAE, and much less focus, I think, on the other three GCC members. I mean, are there any initiatives or policies from those states that stick out to you that you'd mention in terms of diversification over the next decade?
Yes, I mean, and I think so. Within the Gulf, broadly speaking, the country is split into two categories. Those which have phenomenal sovereign wealth and hydrocarbon resources, so they don't really need to diversify, and that's Kuwait, Qatar, and the UAE.
But surely Kuwait. I mean, yeah. Sorry. Go ahead.
It doesn't mean they aren't, but they don't need to. And the UAE particularly is very far ahead in a lot of these sectors. Saudi Arabia, Oman, and Bahrain, they have far. If you look at, for example, the sovereign wealth per capita or per national, or the hydrocarbon resources per national, it's a tiny fraction of what it is in the other states, and so they really need to diversify in order to generate revenue for the public sector, to create jobs, and so it's really a life or death thing, and that's why Vision 2030 is so critical to Saudi Arabia. But Bahrain and Oman are also, also very engaged. Oman has sorted out its public sector finances, which were a mess, but they've really transformed them in the last couple of years. And now they're working on improving the business environment and attracting FDI, a lot of it actually from other Gulf states, but also more broadly. And Oman has certain sectoral focuses, hydrogen, tourism, trying to develop some manufacturing. Bahrain has its own capacities. Bahrain has very good human capital, relatively affordable in the Gulf, and so they work in sectors such as kind of business process outsourcing, financial services. And Kuwait is somewhat the laggard in the region in terms of its diversification. Again, it doesn't really need to diversify, but it has its own Vision 2035, and we can talk in detail about it. Maybe I don't want to go on, but they have made some significant reforms in the last year, particularly since they suspended Parliament, which was a kind of a barrier in many ways to getting new laws passed. So yeah, Kuwait has got its own areas as well.
Thank you. Christian, I kind of left you behind by not following up on my first question, so I'm going to actually follow up and lump it into my second question, if you don't mind. I mean, you mentioned the youth in Saudi Arabia and how engaged and how genuine that is in the sports and cultural festivities aspect of it. I mean, obviously Saudi Arabia stands apart from the rest of the GCC in terms of the size of the country and the population size. I mean, does that make its investments in these sectors more likely to be a sustainable economic driver than the rest of the GCC? That's one part of the question. And then the second thing is, beyond kind of event hosting, how might GCC states deploy cultural diplomacy, that's festivals, exchanges, media, and heritage branding, in ways that attract investment, strengthen soft power linkages, and channel returns into creative economies, tourism, that kind of thing?
Okay, thanks so much.
Sorry to lump a lot on you.
No, thank you. The Saudi case is different, as you say. There's a much more of a demographic challenge that the Saudis need to contend with. And that's why I think, especially in the Saudi case, allegations of sports washing really do miss the mark, because they are connected to very significant economic diversification initiatives that are necessary to try and create jobs for locals, to create sustainable non-oil, non-energy related sectors. So especially in the Saudi case, I think there is a longer term plan to really integrate the sports, tourism, entertainment, and investment planks of Vision 2030. And we even saw the creation of sports, tourism, and investment ministries on the same day back in 2020, albeit right before the pandemic really brought everything to a halt for about 18 months. And they've gone into overdrive in many ways since 2022 especially. So I think the Saudi case is different from the other Gulf states just because of the demographic issue you identified. In terms of event hosting, or going beyond event hosting in terms of cultural diplomacy, I think part of the objective of bringing people like Ronaldo or hiring Lionel Messi as a brand ambassador for Saudi tourism is to generate awareness on a global scale that something is changing in Saudi Arabia, that there is something called Vision 2030, that the Saudi Arabia people think they may have known about 20 years ago, of 9/11, of human rights, of Yemen, isn't the Saudi Arabia we see today, even if below the surface we still see some of the same structures of political power and of inequality that haven't been addressed. But certainly on a global scale, there's now a buzz about Saudi Arabia. There's a sort of sense of expectation that really you can only get through the mass appeal of sport or maybe some of these mass cultural music festivals as well. I mean, there was obviously the comedy festival in Riyadh, which has drawn a lot of criticism, especially from all quarters, which may have been, I think, more of a risky thing to do, just given that comedy by inherently is political, and trying to draw lines around what can and cannot be said invites a backlash when you do that in Saudi Arabia. But I mean, in terms of generating awareness of the changes, it has been very successful. So in terms of generating expectations that the giga projects at some point, to the extent that they are being built, they will need people to populate them. They will need millions of new residents, potential visitors, investors. Mohammed Salman is on record in 2023 as having said he expects the population of Saudi Arabia to be 50 to 55 million by 2030. Now, that's not going to happen. They're going to find that extra 20 million people in 4 years. But there's an expectation of huge targets. And if those targets are going to be not met, but at least sort of moved toward, there is going to be need to be a real shift in terms of marketing strategies. And that's where I think the investments come in. I mean, the Saudis have also been very ahead of the game in kind of identifying how sport and entertainment increasingly emerging, and they're emerging in ways that appeal to a sort of Gen Z youth who don't maybe have the patience to watch a 90-minute soccer game. Mm-hmm. You sort of package things up in highlights, you stream, people watch at their pleasure. So channels like DAZN, for example, have been very ahead of the game in trying to move into this market. Now, they're still loss-making, I suspect. They haven't yet proven their commercial viability, but I think there were fewer legacy issues in the Gulf to contend with than, say, in European countries and perhaps even in North America itself. So I think those are some of the areas where the Gulf states are moving in. They don't necessarily have first mover advantage, but they have the ability to move quickly and to also identify some of these broader societal shifts that are taking place.
It's a fascinating topic. I wish we had more time to follow up on that question, actually. But I think we only have about 9 minutes left that we need to wrap things up. So I guess I'll follow up with 2 more questions, and unfortunately we won't have time for audience questions. But Dr. Amin, putting your World Bank hat on again, what are the most essential macroeconomic and fiscal reforms that would support sustainable diversification? And how do regional investment linkages factor into the Gulf's long-term economic resilience?
Very good question, Omar, again. So I would like to address this in 3 or 4, maybe if I have time, five again, areas, if possible. So the first one, of course, is fiscal reforms and smart spending. As I mentioned, tax revenues are very low compared to other sources of revenue in GCC. For example, in Saudi Arabia, even with the VAT reforms that they did, increasing the VAT rate to 15% in 2020, the tax revenue is $41 billion additional revenue up to 2025. So that's a drop in the bucket when it comes to Saudi Arabia's economy. So much more needs to be done on this front. And taxation means private sector development. So without private sector, there is no taxation. So again, a move towards developing the private sector, a resilient private sector. And when we say private sector, obviously, it's not going to be as much oil and gas dependent. It has to be dependent on new sources of economic growth. That's the first area that I think the states needs to pay critical attention to. The second one is the major issue of fossil fuel subsidies. IEA mentioned a report in 2023 says that around close to $90 billion have been allocated to fossil fuel subsidies in GCC economies. Of course, Saudi Arabia is the largest one. but that's about 4% of the economy of the region's GDP. Only in 2023, you can add these numbers up in terms of billions. It could get to $1 trillion or surpass that in the past decade. And that is a source of money that could be invested in new sources of technology. So what I call is from brown to green subsidies. We have the brown subsidy on fossil fuel energies. We can transfer those subsidies to green energy technologies and accelerate the development in that sector. Even if we don't transfer the subsidies, removing the fossil fuel subsidies will level the playing field for the green technology, right? That will make them more competitive. So that's the second area that I think the region has to pay attention to. Of course, UAE has done a lot on this front. Oman has done has taken some serious steps, but again, more needs to be done. And the other area that I would like to mention is because you're short on time, is the regional intra-GCC investment. It was mentioned that some countries are not, again, they are at different levels of development. Oman, for example, needs to diversify very quickly at the current ratio of deposit to ratio of production ratio of oil and gas. They probably have a decade or so until their resources are depleted. So they have to diversify very fast. And they have a larger labor force. Other countries that don't have that kind of stress in time. So therefore, intra-GCC investment in the and linkages will help all these economies to tap into each other's, I would say, comparative advantage and benefit from it. And again, things are being done. For example, right now I understand that the electricity grid between Saudi Arabia, Bahrain, Kuwait, and UAE, they're trying to integrate that so that they can benefit from each other's renewable production or other sources of electricity production. And some of the ports are being integrated as well. But again, much more can be done on that front. And last but not least, I mentioned the jobs, that 1 million jobs needs to be created. And as a World Bank right now, that's their main motive and the themes of their meetings, job creation for the youth. And again, the countries in the region have that 1 million target every year for the next decade to create the jobs in the private sector. I'll stop right here.
Thank you for being concise. I appreciate it. Lastly, Justin, turning back to you. I mean, let's turn to economic risks. I mean, what are the key risks policymakers should address to ensure that that this is a sustainable, locally anchored, innovation-led development in the GCC?
I think there's a really critical fiscal risk, and Amin mentioned this, particularly where in this period of oil's now down to 61, really for the first time, briefly in May after the Liberation Day, but the first time since 2020. So oil prices are lower, and that could be a strain for some countries if that persists. So that could eat away at investment. It could may result in the need to raise taxes in certain areas. So the way that's managed could have an impact. And I think, as Amin said, it's really critical that Gulf states, as they need to consolidate fiscally, they do things like getting rid of inefficient energy subsidies. That's very sticky in many countries, rather than introducing taxes and fees that inhibit innovation. And actually, in the last year or two, several Gulf states, including Oman and actually now Kuwait, have kind of reformed a lot of government fees and charges to take away some of the red tape and cost for businesses. So there's that fiscal risk with low oil prices. I think there's also a risk of policy unpredictability. Although many things Gulf states have been doing in the last couple of years have been very good, there has in the past been sudden shifts, and particularly for companies that want to invest long term, you really need to encourage companies that there is stability of policy. And that's an issue here in the US as well for different reasons. But creating incentives and ensuring that those persist. I think that's one of the reasons why it's taken a while for foreign companies to really invest in Saudi Arabia in Vision 2030. I think that's beginning, and for example, the FDI in Saudi Arabia's kind of annual FDI is sticking around 2% of GDP. It's been like that for the last 4 years. Vision 2030 targets almost 6% by 2030. It is beginning to pick up, and I think one of the reasons is companies are beginning to feel more confident that policy is stable and will persist for an extended period. So yeah, the fiscal risk and then the unpredictability risk. I think the geopolitical risks are not such a concern. That's often been something that's weighed over the region. But this year we saw really the worst case scenario that many people have feared with the conflict with Iran, and it had minimal impact on the GCC. So I think that reduces some of that risk.
Stability of policy, what a thought, beautiful thought. But yeah, I think it takes time to demonstrate to the market and to investors that policy will be stable and that you're a safe place to invest. It is 11:39. I promised the organizers that I would bring this ship to an immediate halt at 11:40. So I think we'll leave it there. Unfortunately, we don't have time for final thoughts, I guess. But I'm doing my duty. So thank you, everybody, and let's thank our wonderful panelists for this very interesting discussion. Thank you, Christian.
Thank you, Omar.
Thank you.
Not that much, no. I like at an angle, yeah? Okay. Yeah, thank you. Take the other cable out. The other cable out. You want to turn it? Wait.
All right, ladies and gentlemen, while we're miking up our next panel, we'd ask you to remain in your seats. This is not a break. We're literally just moving up, and the next panel's coming up here. So thank you. Dr. Thafer.
Okay, so it is a distinct pleasure, ladies and gentlemen, to introduce first our moderator this morning, a former U.S. Representative, Nick Rahal, an advisory board member at the Gulf International Forum. He served West Virginia's 3rd Congressional District for an impressive 38 years. Congressman Rahal was a trailblazer in the U.S. House of Representatives, where he held key leadership positions on both Transportation and Infrastructure Committee and the House Natural Resources Committee. A renowned statesman, he's widely recognized for his advocacy for peace and U.S. engagement in the Middle East, meeting with global leaders to advance diplomacy and mutual understanding. You know, that's something in high demand always in the Middle East. His legacy of bipartisan leadership and lifelong dedication to public service has earned him deep respect in Washington and beyond. Now, I'm honored, and it's a distinct pleasure to welcome His Excellency, our distinguished guest, Dr. Mohammed Nidal Al-Sha'ar, Minister of Economy and Industry of the Syrian Republic. Dr. Al-Sha'ar previously served as Minister of Economy and Trade and Chairman of the Higher Investment Council. he has been recognized internationally for his contributions to economic policy and Islamic finance, ranked among the 100 most influential Arabs by Arabian Business and listed for 11 consecutive years among the 500 most influential Muslims by Georgetown University. In 2006, he received the prize for banking excellence from His Highness Sheikh Mohammed bin Rashid Al Maktoum and was twice nominated for the Nobel Prize for his pioneering work in Islamic bank and finance. Please join me in welcoming His Excellency Dr. Mohammed Nidal Al-Sha'ar. I'm sorry, it's in English, so I have to remember. And Congress Nick Rahal for this special fireside chat. No. Welcome.
Thank you, Danny. I want us to sit down. Thank you.
Thank you. Thank you. Yeah.
Thank you so much. Am I on? Okay. Thank you, Dr. Thaffer, for that introduction, and I want to commend the Gulf International Forum for once again hosting a very strategic and important conference. It appears that each year that this conference is held, the GCC states have become more important in worldwide affairs, whether it be political or cultural or economic. And certainly the individual I'm about to introduce to you, his country has become more important within the last year as well. We've seen quite a bit of change in his country, and for the better, I might add. But Dr. Thaffer has already given you the background of our distinguished and honorable speaker that I'm about to present to you. And so without further ado and without further comment, I will present to you His Excellency Dr. Mohammed Nidal Al-Sha'ar, the Minister of Economy and Industry of the Syrian Arab Republic. Welcome.
Thank you. Thank you very much, Nick. Thank you very much, Doctor. It's my pleasure and honor, in fact, to be in here. Especially today I'm here and I'm holding this on my chest. This is the new Syria that we're so proud of. Syria today is a different place. It's a different geography. It's a different concept, different mindset, different way of thinking. And we're so proud to introduce the new Syria that we've always dreamed of, but we were deprived of as well. And today, as His Excellency said, Syria is a new country. It's gathering momentum. It's gathering interest of the whole world, actually. This opportunity for us is a challenge. It opens up new ways for us to, march into the development of the Syrian economy and the Syrian people as well. We've been distant, unfortunately, for the last 60 years, and specifically the last 15 years from the whole world. We lost technological advancements. We lost human and social advancements. We were completely deprived of everything. We lived under tyranny. We lived under torture. We lived under, things that the pain that we went through, actually no nation has gone or has witnessed in the past. And today we emerge from ruins and the wreckage of Bashar al-Assad and his regime. And this represents for us an opportunity to do the right work. And I'm sure His Excellency has some questions regarding Syria today, but I would like to just to share with you that there are 3 overriding principles that we are adhering to today in building our new country, our new economy. First is resilience. Second is governance and transparency. Third is inclusion. Those are the factors that we were deprived of in the past. In fact, we don't know how to do them. We don't know how governance works. We don't know how resilience is built. We don't know how inclusion can be done. There was some kind of inclusion. There was some claims that we have inclusion in Syria, but it was nothing but superficial. and it was custom tailored to serve certain groups and certain personalities. So today we're starting afresh. Those 3 guiding principles will pretty much control everything we do, starting from infrastructure rebuilding, all the way to energy, all the way to SMEs. Everything we do, those 3 overriding principles will govern our actions. And I think it's a great challenge. We need to learn. We need a lot of training. We need a lot of education. We need to be exposed to the world that we were not being able to being exposed to. We need to have new friends. We need to share old friends, new ideas. So the whole process is so dynamic and so diversified that the beauty of it, it's very difficult that wherever you start from is a good start. It's a good place. Any place you start from is a good place. So we are blessed, ironically, by this ruins or this destruction that was imposed on us by the previous regime. I think this is pretty much, Nick, I'm sorry took the mic from you, but it's just to set the mindset, this all together.
I think you've set the stage very properly, and those guiding principles that you described, that is, guiding your new country, are certainly noble goals that we all hope that you're able to achieve, and achieve with a great deal of regional involvement as well. After 15 years of war, the sanctions beginning to ease somewhat, and markets reopening, your country faces both devastation, need to reconcile internal divisions, and you're facing a fresh start. What new steps do you see your ministry taking to stabilize the economy, secure the essentials, and restore basic market functions? And in what sequence would you put those goals?
Your Excellency, anything we do today, we cannot do in isolation. I think that the main goal today is to reintegrate with the world. And this reintegration has to take shape in first realignment with the neighboring countries and with the Arab world and with the the countries that are friends today. And the second thing is repositioning ourselves in the Middle East in general. I think Syria has a wonderful opportunity to become a hub for so many things in the region, and we should seize on this opportunity. So reintegrating us is the first step. And although we are doing so many things now in terms of the local economy, in terms of the local communities, but those are not enough if we don't really perform that integration in the appropriate way. Again, I always say that we've been deprived of everything in the past, so we have to come back to the international community and learn as well. As far as the economy, Your Excellency, today we have real progress. This progress is not being felt on the streets because of the mass destruction that we had. Today I can give you an example. In Aleppo city by itself, which is the industrial center of Syria, we have about 540 factories came back to work again, and they're producing and their products are in the market. You're talking about 3 or 4 months, because I would not count the first 3 months of this government. It was just, finding our ways. So far, I have myself signed about 1,570 or 80 licenses for factories in all over Syria. Today, all products are available. In the past, you have to wait months, days, sometimes, just to get your basic, needs, like bread, gas, oil, all these, all these products you had to wait. Today, they're available, and they're available at a lower price than before. The market is open. Everyone can start doing business today in Syria. We have a new investment law that is very appealing and very attractive. And it pretty much matches all the investment laws that you see in developed countries. So it's not an invention. We did not create something from out of nothing. We learned from other people's experience. So this investment law is now in effect. and will start issuing licenses for investors from all over the world. And we have also taken care of protecting investments, because when you come to a new country, coming out of war, you always have this fear of, should I put my capital here? Should I invest in here? What are the guarantees? All those questions we're trying to answer to investors. So we did something, for example, with the Saudis, and this is, I think, a very important step for us. We signed with the Saudi government, with the Ministry of Investment there, an agreement to protect investment in Syria and in Saudi Arabia. And this agreement is pretty much textbook style of good governance and transparency. And it protects anyone's investment in Syria. There is a sovereign level of protection, and there is a private level of protection. And we are moving forward by diversifying means of protecting investors. On the other side, we have created agencies that deal with specific issues in Syria, like development funds, for example, that used to follow the Ministry of Economy. Today, it's by itself, because it has to be focused more than anything else. In our ministry, the ministry that I am minister of today, it's a result of 3 ministries. We merged 3 ministries: Ministry of Internal Trade, Ministry of External Trade and Economy, and Ministry of Industry. We did that because we want to have some integration, and we want to have some comprehensive view of the economy. You cannot do industry without looking at trade. You cannot do trade without taking care of industry. So this view is changing the dynamics of the market here in Syria. Any Syrian today can transfer money in and out. There are no capital controls anymore. That's done, finished. And no capital controls for any investor who is coming in. Repatriation is allowed. Everything is allowed. We're modeling ourselves like, I would say a directed, market-oriented economy, free economy, but with some interference from the government, just to strike the balance between the forces of supply and demand. Because in a country like Syria, Your Excellency, supply and demand are never balanced, because you're coming out of a war. So who's going to balance this very important, scene in Syria is the government. So we're interfering now in the markets in a very positive way, just to strike that balance. And once that balance is stricken, that's it, we're out. So all the decisions now, as a minister, I come up with, they're all temporary in nature, because we realize that we are at an embryonic stage. An embryonic stage needs some kind of flexibility and needs to be very thoughtful of the changes, the rapid changes that are taking place in this new kid that you're raising.
It sounds like you're truly emerging from a nightmare, if
Yes.
you will, and aspiring to your dreams.
Yes.
For the future of your country, and that sounds very exciting and challenging. While you're here in Washington, what would be your message to the U.S. administration and the Congress, if the Congress ever comes back to work? I know you're suffering from jet lag. I think the Congress is suffering from work lag. But anyway, what would be your message to them if you were able to meet with them on sanctions, the humanitarian carve-outs, financing tools? What would be your message to the administration and Congress as to how to unlock American business and investment? You've touched upon it, I know, already in some very exciting areas. But what reforms would you deliver in return to reassure U.S. companies and the Syrian American business community that their investments would be secure and safe?
Your Excellency, in general, my message would be, in general, it's long overdue. This should have been done a long time ago, but unfortunately, we were distant from the U.S. For political and personal reasons. So here we are, we're back. We're back with open hearts, with open hands. We would like to cooperate. We believe in the American financial system, if you're talking about the economy. We believe that we can benefit from the models that were created in the U.S. And we think that in Syria, the fact that we're coming out of nothing, as you said, and a nightmare actually. That presents an opportunity for us to do things right from the first time. We don't want experiments. We don't want to try this system and that system. And we understand and we believe that the U.S. financial system is a unique system. It's a good system for us, and we can follow up on it. Now, to do that, we have to integrate ourselves into that system. We have to go by all the rules that were put in here and took years and years of efforts and pain, and we just have to use them as from the shelves. It will be much easier for us than experimenting, because there are some calls that, you know, Syria is a unique country and we should follow our own model. I don't think so. I think there are ready models today that we can follow, maybe with some fine-tuning to fit, you know, some local changes or local dynamics. But our message would be that we would like to cooperate. We would like, most importantly, we would ask for technology transfer. For me, as the Minister of Economy and Industry, technology, digitization, all these issues we missed completely. We need them back. And we, in Syria, I cannot claim that Syria is a great country. We are a very small country. We're around 20, 25 million inhabitants. We're not a good market. We're not a big market for any country. So what is it that we have to offer to replace this small size or to substitute for that is our youth. You're talking about over 65% of Syrians around the age of 25. Those guys are ready and to absorb all new technology. They can form an army of technological expertise. And the US can, you know, deal with those guys. Let it be AI. Today, AI is the fashion. All in programming, you know, even cryptocurrencies. Even today, we are thinking of blockchain technology. In my ministry today, some of the employees are taking courses in blockchain technology. So we will produce products. We will be able to import and export. But most important for us, and my dream and our dream today in the administration, that Syria becomes a hub for something unique, something qualitative, not quantitative, because we cannot be another China. You know, we pretty much understand our limitations. So this will be one of the messages to the businesses. I think Syria's geographic location is very important as well. We can become the corridor between Syria and the Gulf countries, and this is essential. It should have been done. It was done in the past, and we should revive it again, and we will. We're working on that in a very serious way. In addition to that, you know, Syria is an important political center, you know, with its small size, yet it's very important. And we have, at one point, to harmonize this whole area. Enough wars, enough conflicts. And I think Syria would be the most important factor in striking this harmony in the area.
It seems as if your goal is to change from the past in which Syria was used as a game board upon which regional and foreign powers played their games. You're changing it now to a hub for business and a hub for investment opportunities and a corridor through which these perhaps same countries can now establish economic ties.
Yeah.
Economic ties with the Gulf, for example, are expanding rapidly.
Exactly. We don't want to be bullies anymore. Enough of being bullies. We've been bullies for a long time. You know?
Right.
It's enough. We want to be a source of peace, source of friendship, source of opportunity.
And how do you propose to attract GCC capital, for example, and expanding economic opportunities with the Gulf countries?
Our relationship with GCC countries, I think it's almost a destiny. It's not really a choice. It's not an option. It's a must. This is an extension of history that goes back thousands of years. And today, with this peaceful mindset that we have in Syria, and the friendly attitude that you see today in every Syrian, I think opens up opportunities with the GCC countries. And they came with open heart, actually. Today we have so many MOUs signed with Saudi Arabia, with Qatar, a little bit in Kuwait, not much, with UAE as well. One of the projects, big projects in Syria that are two-sport, you're familiar of, was signed with DP World in UAE. We did the electricity and the gas with Qatari and Turkish as well, Turkey as well. We have so many projects with Saudi Arabia. For example, when it comes to training and development, we have an agreement which is now in effect, and it started with the Saudi on training and development of our young, kids. Nick, we have a big problem in Syria today. We have high unemployment rate. It exceeds 60%. Those guys need to work. These guys need to get back to the labor market. In addition to that, the most disastrous thing that we have over 2 million young people who don't know how to read, don't know how to write, don't know how to fix anything. Those guys are not in the cities today. They are in the suburbs, they are in the villages, they are on the borders. But at one point, they will come to the city. And if we don't find a place for them to work and provide them with the appropriate training to earn money, they will be ticking bombs. And our resources, economic resources, are limited. So we have to rely on our friends to provide investment opportunities. We're not going to ask for aid. We're going to ask for investment opportunities. We would like our friends to come and build factories, start projects, so these guys come into join the labor force and start being productive. The only way to strike social cohesion and harmony in Syria is to fill people's pockets and money. That's the best way. There is no other way. If we just keep talking politics, it's not going to do well.
Mm-hmm. Sounds like you have many tools in your toolbox with which to work. And I'm assuming PPP, public-private partnerships, is part of it.
Yes.
Co-investment opportunities and other tools with which to attract foreign investment.
Yeah, let me tell you a bit, a little bit about our economic philosophy today, so we can go, to this PPP that you just mentioned. Today in Syria, we've decided that the government should not get involved in the production process. We are not going to be producing anything. In the past, we used to produce everything. The government used to produce shoes, yogurt, cheese, everything. That was the socialist, what was called the socialist system, which I don't think was socialist. It was chaotic. And so today we took the decision that we're not going to get involved in the production. We have over 1,200 factories today under the ministry. We are offering them for investment. We're not offering them for privatization, for investment in the form of PPP. We prefer PPP on BOT because BOT could be good for infrastructure projects, but those factories, I think PPP is very ideal and appropriate for them. The same thing when it comes to trade. We have so many properties all over the country selling, cucumber, tomatoes, potatoes. Imagine the government is selling. That's not our business. Mm-hmm. It's almost a shame. So we've decided to cancel that. And we're offering PPP as well.
Thank you, Your Excellency. With that, if you will, we'll open it to the audience for questions.
Yes, sure.
Okay. I think somebody's with the microphone coming. I think we had it up here in front first.
Welcome to Washington, Your Excellency, and thank you for this rich information panel discussion. My name is Luay Al-Humsi. I'm with the U.S. Syria Business Council based in Washington, D.C. Your Excellency, you mentioned the qualities of Syrian economy is the youth, manpower, and also the location to become a hub for the region and peace for the region. Also, can you add more qualities about the agriculture and the location on the Mediterranean as a tourism, also a location for attracting foreign investment? That's my question.
Definitely. Of course, there are so many. We're so lucky in Syria. I think we are blessed. I mean, we are a small country, but blessed country. Of course, tourism is very important. As you know, there are more than 1,500 sites registered at the UNESCO that are, historic sites. We can cap on those, definitely. The Mediterranean is very important for us. Other countries have Mediterranean as well. It's not exclusive to Syria, but we can, utilize that and seize that on it. The geographic location, I think, for us is also important politically because we can connect Turkey down and the Gulf and Israel as well, and European countries as well. So pretty much Syria can be the center for that. And when it's friendly, peaceful, I think everyone benefits. When Syria is, safe or Syria is stable, the region is steady. And when the region is steady, I think the whole world is safer.
Well, thank you for the good news, sir, about Syria. I am from Yemen. I'm a professor of economics and I'm a member of the parliament, the Yemeni parliament. We share a lot of, frustration. My question, we are talking about the resilience, the regional resilience. Regional resilience imply that we are talking about the Gulf region as one, which means that the optimize, in order to assume that they will optimize and coordinate their policies, they will optimize and coordinate their future investment and priorities for efficiency and competitiveness. They will also optimize and coordinate their governance and regional structure of relations between the countries. Now, that's as far as the Gulf countries are concerned, and we hope that they will do that in order to succeed. About Syria and about Yemen, we are part of the region, okay? Now, the question is how relevant is really the enhancing the policy framework and then framework of objectives and the strategies for the region to include Syria and Yemen, for example. This question becomes very relevant when you talk about what are the conditions for sustainability and for viability, long-term viability of development and growth objectives in the Gulf regions. What are the risks involved that can threaten this, objective? And how efficiency and effectiveness of this objective can be enhanced from a regional perspective. I think these are very relevant questions because ignoring the underlying requirement for sustainability and for viability, which are very, very, very linked to the region in general, more than the Gulf, is probably going to be, enhancing the risk, future risk, but also will, undermine the potential. That's it. Do you agree with me? How do you think that Syria and Yemen and the other, countries in the region should be, looked at from this perspective?
Thank you for your question. In fact, your question is, my God, it's going to take me a long time if I were to answer it all. I want to start from something I mentioned. Is you start when you're talking about reintegration, you have to start from diplomacy and politics. So you have to do diplomatic realignment, and you have to do political rearrangement or re-engagement. Re-engagement is really the appropriate. And I don't think Yemen or Syria are foreign to the Gulf countries, because in the future we'll be sharing issues more important than geographics. The idea, sir, in sustainability, the way I see it, you can attain sustainability when you make yourself needed, when you create a need for you. When you create a need for you, this risk-reward equation that sometimes can be scary gets soft, because then the reward from engaging with you becomes more than the risk. When you make yourself needed in a fruitful way, in a meaningful way, not needed to bully the others like we used to be in the past. So this is pretty much, I think, the solution the way I see it.
Thank you, Minister Sha'ar and Representative Rahal. Professor Sha'ar, I'm very thankful for these insights and for that optimism, because I'm hearing a lot of the George Washington professor, because as we all know, and you're our teacher in that, it starts by stability and rule of law and order. And you being a veteran in the Syrian government since Adel Safar's government, you know a lot about money and economics in Syria especially. But because you survived all that time and that centralized system, this is my question. What do you think is the best system for the future of Syria? Going back to a central government where everything goes on, or heading towards a more modern federal system that is able to secure business environment, stability, law and order, courts? All these are basic needs for doing any basic economics, but rather than being all the hub, as you just mentioned. Thank you.
I answer? Yeah.
Yes.
Thank you. This is pretty much a personal question. Did I survive the previous government when I was Minister of Trade in 2011 and 12? The answer is no. I'm still suffering. I have so many deficiencies because of those 2 years. It was not easy to work with Bashar al-Assad at all. And I realized that when I became minister in 2011, 2012, I was nothing but a decor. I was a facade that was needed at that time. They put me in there. So I had to quit and I had to leave. And all those years, 15 years that we passed by, learned a lot. Actually, this learning is very important for me today to enable me to do my job right. I'm not claiming that I'm doing my job right, but I'm thriving too, like everyone else. What is the system that we would like to have? Free economy, that's for sure, but with checks and balances. Syria today cannot survive without checks and balances. If you leave everything free, things will become chaotic. So we have to interfere. We have, in a way that is soft, and our interference should be temporarily, should not be permanent. We're not going to be like playing a father role like previous governments. This fatherly role is gone. We're not going to assume it again. It's not productive, it's not meaningful, and it's not loved by people. So I don't know if I answered your question.
Except for the political part of what should be the system, like federal or centralized.
We started with the presidential system, and I think at that time, 7 or 8 months ago, you needed the power to be concentrated in a place, in one place, because at that time you didn't know who's around you, who's in the scene. You're coming in a country that you left years and years ago, and you come in afresh, and you don't know who's around. Who is it that you can trust? Who is it you can work with? So it takes time, I think, for this experience for you to get. And I'm talking about as a president, not as a minister. We are employees. So the presidential system was adopted because of this, unfamiliarity with the surroundings at that time in Damascus or in Aleppo and that. Now, as we're moving, you start seeing agencies, like I mentioned a little bit ago. When things need some focus, we are creating agencies, we're creating bodies to contain it and to take care of it and manage it. I would think that after the parliament, the formation of the parliament, which is coming very, I think in a month or two maybe, you'll start seeing new forms, new bodies, new structures in the government. The nice thing about this government today, it's very adaptive, Your Excellency. It's very flexible, and it takes things away, it takes reality into concern. It's not like, rigid. It's not that rigid. It's very flexible. So over time, I think you will see different forms and different structures, just so to take care of the emerging reality that is changing every day.
I think we have a question right here. Where'd the microphone go? Oh, I'm sorry. Back. Then we'll come over here.
Yeah.
Okay.
So, two-part question for you. You mentioned, of course, the situation of youth in Syria, how it's a challenge, also an opportunity. How do you ensure that the different aspects of integrating youth into the economy are coordinated, right? You have basic education needs for some that you mentioned. You have job training, apprenticeships, employability. There are many different angles. And in other countries, we've seen these things handled piecemeal as opposed to in a coordinated fashion. That's my first question. And that also includes, once you prepare youth to enter the job market, how do you prepare enterprises to take them on? And those enterprises obviously need to be in some kind of growth mode to be able to hire. So that's another piece of it. The second piece is with the Gulf states and the European countries wanting to support Syria, how do you do that in a coordinated fashion? So there's a lot of opportunity. There are a lot of people that want to help, but the chaos that you mentioned earlier, we could conceivably see that with different actors and funding streams and initiatives going on in the country.
Thank you. Actually, you had 3 questions, not 2. You promised me of 2. When it comes to training and rehabilitation, I cannot, claim that we're doing it in a, wholly, like general, or a coordinated way. It's coming in bits and pieces, actually. Like in our ministry, we have engaged some bodies from the European Union and from Gulf countries to do training and rehabilitations. The same thing took place in the Ministry of Telecommunication and the other ministries. I think it's understood that in this situation we don't have the general unified outreach. Okay, we are developing that outreach through the whole government, and then I think things will be more coordinated. Now, as far as how to empower those youth, and their millions actually, more than 6 or 7 millions, it's good to have mega projects, and we're having mega projects today, but those are not enough, and those are temporary in nature. So what we're trying to do, Your Excellency, now is focus on small and medium enterprises. We think that small and medium enterprises are the best place to really accommodate for this unemployment and to accommodate for the youth. Be it free, like, encouraging people to start their own businesses, their own workshops, that's employment. And when they hire their brothers and sisters and their cousins, that's employment. So we're starting from small and medium enterprises. We have set up in our ministry, which is in charge of that over the whole country. It's our ministry that is in charge of small and medium enterprises. We set up a body just a few weeks ago, and the head of the body was supposed to be with me, but he could not make the flight, so they're coming tomorrow. And so this is very much our focus now, small and medium enterprises, not only for economic reasons, not only for to take the kids from the streets, also for social objectives. In the past 60 years, Syria was famous before 60 years that it has a beautiful medium class, middle class. It was beautiful middle class. We lost it. And how do you build middle class without small and medium enterprises? This is the most important factor. So we want to get that back. I don't know if I answered this. If I missed anything. Okay.
We have time for 2 more questions, and the last one's going to be over here.
That lady, please.
Yes, she just had her. Yeah. Oh, there we go. Okay.
Hi, thank you both. Dr. Shah, I'm wondering what kind of economic vision you have for Syria's relationship with Lebanon. Is there room to cooperate? If you could just expand on how you see Syria and Lebanon's economic relationship moving
Syria
forward.
in the future with whom? With whom?
Sorry?
Lebanon.
Lebanon.
With Lebanon. Oh, with Lebanon. Okay.
Thanks.
Okay. When you say Syria, Lebanon, for me, it's the same. It has the same connotation in my mind, in my conscience. And I think it's the same thing with every Syrian and every Lebanese. Again, we were distant from each other for reasons you and I know, and Nick knows more than anybody else here. So today, we're coming back to the region in a completely different approach. And I think Lebanon as well is coming back to the region in a completely different approach. So it behooves us that we crisscross now and we start working together. This is very important for us as Syrians and for Lebanese. And I think the fruits of this change has started to take place. Just 2 days ago, our Minister of Foreign Affairs met with the Prime Minister of Lebanon, and I think there are so many things that were discussed. Even at the economic level, my level, I'm talking to the Lebanese ministers, to the central bank as well, on how to smooth the economic relations between Syria and Lebanon. Because, again, Syria and Lebanon are destiny. Again, they're not a choice. It's a destiny we have to work on and to make it, look as noble as possible.
And I think all the messages coming from the Lebanese leaders today are very positive about building a stabilized relationship with Syria, not only from current leaders, but those that may want to be leaders in the future are making the same statements. Last question right here. Oh, wait a minute. Where did Mike go? Oh, there. Okay. Last question.
Richard Coleman, I retired from Customs and Border Protection. 60 Minutes program, America got a snoot full of the damage that's awaiting who knows what and when. The reconstruction of all those devastated houses, apartment buildings, and whatever. It was a competitor to Gaza in terms of the horrific, gravel and nothing there. My question is, who's going to pay for the reconstruction? Where's this money coming from? Where's the partnerships going to come from? You say there's not going to be aid. I don't see how you could generate on your own economy, anytime soon, housing for all those people. What's the current thinking?
Thank you. In fact, this is a nagging question, and it's a question in everyone's mind. We have destruction. We have houses that were completely, destroyed, over 1.5 million. Now, if you want to rebuild them the way they were, then you need a lot of money. And it was estimated to exceed $300 or $400 billion. But the question is, do we need those houses to come back to the way they were? The answer is no, because they were shabby, they were disgusting, most of them, or at least some of them. So what we would like to follow a different approach. This destruction, we're going to turn it into an investment opportunity. So investors will come in an investment mind, not to just rebuild and compensate people for their destroyed houses. Because if you follow compensation principle, that I want to give you a house, instead of the house that you lost, then it's a completely different ball game here. But we are following the investment approach. So come in, do nice, housing, whatever it is you want to call it, condominiums or villas or whatever it is, the shape or form you're used to, and use it as an investment opportunity, and introduce financing, because without financing, you cannot do that, because investors who come for real estate, they need someone to back them up in financing. So we're encouraging now the banking sector to open up financing and to provide guarantees for those financing. For example, we should have mortgage-backed securities. That's the most important thing that we should have today. That those mortgages should go to the secondary market and be traded, and that will enhance the whole economic base for borrowing and lending and all that. So the approach is different, and now every project we are awarding is based on this principle that it is an investment, it's not replacement. Now the problem we're having with that, and I'm being very clear with you, is ownership. Ownership is a real problem. Because in the past regime, ownership was very chaotic, and it was based on corruption. So today, identifying ownership is becoming an obstacle for us, but we are working through that. The second issue is those people who are coming into their new home, they need financing, and they need to work. But first, we have to find them work, so they are able to pay for the cost of their new home. And second, we have to provide them with financing, and that's a real challenge. And it's not something that we are ignoring or no. We understand and we appreciate that we have to work real hard. And what we're doing with investors, we know that those kind of projects are not very lucrative by nature. Public housing, it's not very profitable. So we're offering investors an opportunity to take this project, and in addition to that project, take the commercial project like a mall, like a touristic place or whatever, so there is balance in his portfolio when he comes into the country. So we're using so many ways just to attract investors to start building. As far as aid, I'm not talking about the aid in general. We're talking about like the freebies. We're not looking for freebies anymore. We would like anything that comes into the country to come in form of investment, to come in form of like there will be a return. It will be tangibles. It's not just giving money away. So this is the new philosophy today. But the housing question is very complicated. It's not easy to deal with, and it's a lot of headache.
Your Excellency, you have been very kind with your time. You've answered some very excellent questions, probing questions. You've answered them from a personal experience and from professional experience. And we want to extend a deep thanks to you for not only what you're doing for your country, but what you're doing for relationships between our two countries. And certainly the message you've delivered here this morning is one that needs to get to the administration, and it needs to get to Congress as well. And this dialogue needs to continue.
Yes.
Needs to continue on many levels in this country. And before we let you go, I'm going to turn it back to Dr. Thaffer, who has a presentation to make. Is that correct? Okay.
Oh, that's my gift for today. Thank you. Thank you.
Your Excellency, thank you so much for coming today. We really appreciate it. This is a small token of appreciation. It's a dowel. It's a symbol of economic integration between Syria and the Gulf historically.
Oh, wonderful.
And look, we're revisiting that now with all the changes in Syria, and I hope to see great trade between Syria and the Gulf.
Thank you very much. Thank you. We'll be. Thank you. Thank you very much. Thank you. Okay.
Back over to you.
That was
Okay.
persuasive. Yeah, absolutely. And I must say, if I've got to put my money on something, it'll be the entrepreneurial nature of the Syrian people. That's about as sure a bet as you can find. So, Excellency, appreciate that, and thank you. Mm-hmm. Thank you, Excellency. That was inspiring. Okay. If you please remain in your seats. If you'll please remain in your seats while we swap out microphones. Once again, I want to remind you that if you have time when you leave, Ijtama. All right. Ijlis. Well, ladies and gentlemen, we thank Dr. El-Ashar and Congressman Rahal. That was a fascinating and dare I say a phrase that for my first 20 years of Middle East analysis, inspiring, a phrase that we did not use up until about 5 years ago, hopeful. A phrase that usually was absent in Middle East studies. Now it's my very great pleasure to welcome back Dr. Danya Thafar, who will lead the conversation with His Excellency Mahmoud Al-Awaini, the Secretary General of the Ministry of Finance of the Sultanate of Oman. Dr. Thafar, Excellency, the floor is yours.
Thank you. Thank you so much. It's a distinct pleasure to be here and to welcome His Excellency today. There's so much to talk about when it comes to Oman and its reform. Another wonderful story from the region. We were just talking about Syria and its resilience, and now we're going to talk about Oman and its economic reform. Under the visionary leadership of His Majesty Sultan Haytham, Oman has launched one of the most ambitious and far-reaching reform initiatives. And the story is amazing this last 5 years. Oman has shown fiscal discipline, institutional modernization, and economic diversification that's quite impressive in the span of 5 years. The Sultanate has cut public debt nearly in half, achieved budget surpluses, and restored investor confidence with decisive fiscal management. Quite impressive, actually, and we're very proud to see that in Oman. Sweeping administrative reforms have streamlined government operations and also strengthened accountability in Oman across various institutions. Even there was the passing of important social protection laws that empowered Omanis and their economy. So it's just amazing to witness all of this that's happening in Oman. I really think that the Ministry of Finance has been instrumental, and His Excellency and your leadership, along with the Minister of Finance, have really moved Oman forward, and we're so delighted to have this conversation at this important time. So you're welcome, Your Excellency. First, if you don't mind, I'll start with a question. Or is there something you'd like to say before I start?
Please go
Okay,
ahead.
or you want me to go right into it? So we know Oman has the 2040 vision that's coming up with a bold agenda. You're diversifying the economy in new areas such as tourism, logistics, and green energy. I actually tried to go to Salalah this summer. I couldn't find a place. I was very disappointed because I was trying to escape the desert heat in the Gulf to go to Salalah, but it didn't happen because there's so much tourism now in Oman, which is quite impressive. I wanted to ask, how is the Ministry of Finance aligning its fiscal policy and public expenditure with the vision's strategic goals? Particularly when it comes to economic diversification, private sector empowerment, and innovation-driven growth.
Okay. First of all, thank you, Doctor, for this hospitality, and it's my pleasure as well to speak in front of this esteemed guests. Oman journey started, as you truly said, seriously in 2020, where we set up a very clear midterm fiscal plan after certain number of challenges, which followed a number of years drop in oil prices, as well as this efficiency, I would call it, in managing the overall financial aspects of the physical space in general. And that plan was, I would call it, very disciplined in terms of correcting the situation in general, as well as it was tough, I would call it, in some aspects, but as well
covering very important risk aspects on the other side. All of this plan in general, which we'll talk probably on the following questions as well in more details about, was driven by the thoughts and thinking of the Oman Vision 2040. So all aspects of that was linked with an element of targets that Oman Vision 2040 has to achieve. Specifically, we talk about improving quality of life for citizens, providing security assurance, security protection for some groups, enhancing the business environment to be able to attract foreign investments as well as retrieving the local investments, in addition to creating a full sustainable pathway approach for the physical space, which was the essential because the government over years was the main player in the economy at that stage. So all of that was linked again to the key objectives of Oman Vision 2040 and was set up with a number of initiatives in the midterm physical plan to be achieved and followed up by Oman Vision 2040 in terms of performance reporting and targets in general. That plan was as well integrated with international KPIs, which again Oman Vision 2040 was looking for, and tested and supported by number of technical consultancies by IMF, World Bank, and other consultants which supported us throughout that journey.
Wonderful. It is quite a journey to see especially the fiscal discipline in Oman is tremendous. Even if you compare it regionally speaking, this is, I think, a huge accomplishment for Oman and an example for also other countries to look at. So I wanted to segue a little bit into digital transformation, fintech, and AI. As Oman advances its digital transformation agenda, how is the ministry integrating fintech, AI into public finance and your overall strategy?
Yeah, I think digital transformation was part of that plan. It was an essential element, honestly speaking, to achieve what we were looking for. It was not only good to have, it was must to have, honestly, to achieve our KPIs. And starting from Ministry of Finance, we moved ahead into more advanced technical aspects to enhance our ability to manage the public physical space, including debt management or going for a more advanced ERP system for the government to enhance it. But that was only a proportion of what was happening overall in the government of Oman. So they were another program driven from Oman Vision 2040 with very clear KPIs to digitalize the whole of the government, as well as create aspects of efficiency within the daily activities that touch base on citizen lives, as well as important for the investors to be convinced that this is the right environments and business environments in one aspect. If I talk specifically about fintech, Central Bank of Oman with FSA, Financial Services Authority, work hard to initiate and establish the platforms, the regulatory platforms, to attract international investments as well as local players, SMEs and others into the fintech. And this was very essential elements on the ecosystem because it supports our key financial sector, which tend to be stable, healthy over times, even at the worst stages of the crisis. The banking system used to be very stable, risk was managed very well over time, but that fintech elements was very critical and important for this sector to be enhanced. And this is as well reflected on the capital market, where we have very minimal contribution from that specific sector into the overall financing options or the reflection on the economy. And fintech was very critical element to resolve a lot of issues on the sector. And now we can see kind of results of growth and on these market capitalizations in the market, opportunities offered for funding from the markets, and all of that driven through fintech mainly. One of the good things that we are aiming for now is to have one-stop shop for all fintech applications to be licensed by any parties, either central bank, FSA, or any other parties, to make it easier for the players in the fintech side and to accelerate as well the enhancement of that sector itself within the country before they think even outside Oman.
And yes, the development of fintech is fascinating over the course of the years and technology. And I know that even in some cases, Gulf states like Oman can be more advanced when it comes to the engagement of these kind of technologies. So I want to shift the conversation a little bit to talk about foreign investments and public-private partnerships, if I may. Attracting foreign direct investment is a key pillar of Oman's diversification strategy, and of course, any nation is very interested in achieving that. What initiatives is the Finance Ministry pursuing to enhance the investment climate in Oman and also strengthen public-private partnerships?
Well, investments was a very critical element for the growth factor that we anticipated in the plan. And as I said again, it was one important element in Oman Vision 2040 is to attract foreign investment. So the first initiative started on this aspect was to improve the regulatory platforms that matters for investors. And there were a number of reviews for a lot of regulations in different entities all together to integrate that efforts with a kind of results that give assurance for the investors overall. The second part of it was mainly to improve business environments, and that was probably one of the key aspects that limit us in the previous years to be able to attract investment. So the government established a one-stop shop called Invest in Oman Center, where investors can be contacted and have very specific and dynamic account managers who facilitate, provide information, as well as support them to be established in a period of time that is acceptable by the investors, either licensing or other facilities. In addition, Oman has well shaped or established a negotiation team with a number of key decision makers from the government side, where they negotiate and look at the projects that is interested in Oman on a specific basis, apply certain matrices and try to understand what incentives investors are looking for and get the licensing and provide the permits from one table and as I said. So that make a kind of difference. We start to be people more interested in discovering Oman and the opportunities in Oman. In addition, certainly to promote some of these opportunities to key partners or some of the neighbor countries or some of the friend countries that have already an interest or already tested Oman in general. Our main focus was mainly to diversify this from oil and gas because we were attractive anyway in oil and gas sector from the beginning. So we established kind of promotion schemes for industries, innovative industries, logistics projects, mining, fintech and technologies in general. All of that was the main focus of the new phase. And we have seen that reflection on our budget. In fact, the growth of in the non-hydrocarbon sector in the government revenue itself enhanced by a much higher percentage. It was above 9% on average over the last 4 years compared to 3 to 4% on the hydrocarbon sector. So that gives us an indication that we are at the right track. Still the efforts are continuing and we are studying specifically key list of incentives that can be provided not per sector but per project, depend on the feasibility of the projects and how effectively as well they will add in terms of value for Oman. We have already a number of free zones, the regulation for the free zones updated. These free zones have been already given a lot of incentives from the beginning, it was how to really attract the right player and provide the gaps or close the gaps that they feel if they come to these free zones. So all of that was happening over the last 4 years. We think we already passed very bottlenecks on that area, and now we are aiming for more expansion on the non-hydrocarbon sectors, specifically to make sure that we are moving at the right track.
So if I understand you correctly, you just said that diversification growth has doubled in recent years. That's quite impressive. And, you know, I think something interesting that comes up in discussions here in the United States is the Duqm port, which I know Oman has developed tremendously over the course of the last couple of years. I am going to go ahead and, because I know Your Excellency, you don't have a lot of time, so I wanted to ask you a little bit about fiscal consolidation. So Oman's medium-term fiscal plan has been really instrumental in restoring and establishing macroeconomic stability in Oman and reducing public debt. How has this fiscal discipline created a new space for strategic investments that are aligned with your Vision 2040? And what lessons might the GCC in general draw from Oman's experience?
Well, I think when we start thinking about the midterm fiscal plan, it was a must. It was not a luxury or change that we are just trying to drive. We started the plan where we have a multi-years deficits, very low oil prices anyway, which was the main source of revenue on the government. Public debt was above 70% on GDP, so that was not a healthy sign at all. The reserve was depleted over years as well, the foreign reserve. In addition to having budget equilibrium price was above $80 per barrel at that time specifically. So all of that give us an indication that we have to do a proper correction. And when we think about the correction, it should not be a temporary measures. It has to be a full plan, multi-year plans that have a kind of clear KPIs to be achieved and at the same time are implementable on the ground. So we work that on. We managed in 3 years to achieve an 8-year targets. So end of 2024, we managed to reduce debt to be 34% over GDP. We managed to bring the equilibrium of the budget to $64 to $66 per barrel. That was itself a big achievement, but all of this happens with introducing a new security or safety nets for those categories that could impact it if any measures happens. So there were an additional spend on certain areas, but there were another revenue. We managed to concentrate and focus our spend and be very effective in spending our money in operating and capital costs over 3 years. And we managed in 4 years effectively to develop projects with 12 billion Omani Riyal of budget compared to 15 at that time. So it's efficiency mainly, but it was as well a discipline going on into that aspect. Certainly went through a lot of lesson learned. We had to take a very tough decision at very uncertain stages. For example, we introduced VAT at the middle of COVID, and all consultants was telling us inflation will shoot up to 12. We tried our best to manage that aspects of inflation. We look at all aspects of risk, and we managed to introduce a successful project of VAT in a very tough time, while still controlling the inflation. Inflation was never above 2% in Oman, so now it's around 1% overall because of a lot of control measures. So a tough decision has to be taken from one aspect. It has to be a long-term plan. It's not something that you try this year and once you get oil prices up again, then you get relaxed and do whatever you think used to do over the past on the specific spending matters. I think the biggest important lesson learned is to be disciplined in expenditure and revenue targets. I think this is very important when it comes to Ministry of Finance, and it will never be achieved unless there is a full integration in the ecosystem itself with the decision makers to achieve the targets. So integration, alignment, cooperation internally within the government is very important to achieve the targets, specifically if you are at a tough period of time. So all of that happens in 4 years' time. We are continuing the right and good work on this, but as well we are enhancing our opportunities in securing the economic growth in one aspect, getting diversified economy on another aspect, as well as moving into more ambitious targets when it comes to attracting foreign investments, as well as maintaining the local investments. So all of that happens in 4 years. We have seen a lot of good KPIs. Certainly a lot of international organizations, as I said, like World Bank, IMF, some other consultants, the internal government entities were supporting Ministry of Finance on this journey, but we had to take serious decision and continue to be disciplined over a multi-period of time. And after that, we managed to certainly get surplus on continuously 3 years, 22 until 24, all with surplus budget, while we are still moving ahead, maintaining our capital projects for the nation, providing a safety, security for categories that will need support and help, subsidizing some of the services. Still, we managed to do that over that years, just to protect these groups. So all of that happens in 4 to 5 years' time, which we are really all proud. And I think a lot of partners were supporting us over that journey.
And you mentioned about, first I'm impressed about the inflation, because everywhere I go, inflation's out of control, whether it be in the US and the Gulf. And you mentioned about social safety nets that were implemented while these changes are happening. Could you elaborate a little bit about what that entailed?
Well, we studied again the impact of the measures that we took on the physical space, either by introducing more taxation or having kind of lower spend specifically from the government on certain projects. And we end up that there are certain groups has to be protected in one way or another. And we utilize international studies from ILO, from IMF as well, to look at how this is happening, how is this happening as well through benchmarks globally. And we come out with a plan that protect number of parties. So each kids below 18 years old in Oman now has a kind of financial support directly to their accounts. Everyone above 60 years old now, they have as well a kind of protection the government is supporting. There are certain groups are on the list already. Some of them have been getting some kind of benefits from that safety nets. Start to be universal way of thinking of distributing this protection on one aspect, as well as focusing on specific groups on the other aspects. Certainly this put more heads on the government physical space itself, but was planned for from the beginning. So a lot of initiatives and efficiencies that we managed to achieve over years was reflected and directed to these kind of budgets. So we balanced the equilibrium that we were trying to achieve.
And we would be remiss, I mean, you're talking about social safety nets and whatnot, but also talking a little bit about incentive structures that allow for Omanization, which is the term used for the nationalization of the workforce, used in all the Gulf states: Qatarization, Kuwaitization, Omanization. You know, Omanization remains a cornerstone of the 2040 vision. And how's the Ministry of Finance coordinating with government entities to create sustainable employment opportunities, especially as you know right now, the Gulf is facing a period with a high distribution of the demographics are in the youth and in the working age. So this is a really important period for economic productivity. And if you could talk to us a little bit about that, that would be great.
Good. Overall, I think we have not only Omanization targets, it's a full local content targets that Oman is focusing on. And this is mainly not because you just want to enforce it, it's good for businesses as well. Still, investments, new flying investments are protected sometimes based on the negotiation with the government to allow them to establish their facilities and get into the growth stage. So these are not blockers by any means for any investments to fly in. Second, our main target is to move into the new sectors where we talk about industries, innovative industries, we talk about alternative energies, we talk about technology and tourism and logistics. A lot of these will require kind of skilled employments overall, and we have a lot of talented Omanis, male and females, who are already in the market, and they will need kind of support in terms of upgrading their skills to be more specialized on these new sectors. This is our thinking currently on moving ahead for that direction. The government took a very serious decision that the private sector has to play their role on the employment because this is the only way to be sustainable, but they will need certainly kind of support how to integrate it. So a lot of decision from Ministry of Labor have been taken is to organize, to reorganize the labor market, mainly in the private sector, because it has to be advanced at the following stage, just to serve these key objectives that we are now looking for. The opportunity is there. We think in the last 5 years, if the numbers talks, we issued more than 2 million work permits, new work permits. These are in 5 years' time. If we exclude 30% of them for the low skills worker, it means there are more than 60 to 70% of this number on a country with a population of 5 million only. The economy has created these kind of jobs based on the growth. A lot of them are non-hydrocarbon. So we know there is a huge increase in the opportunity that the Omani economy is offering, and we are trying now to place the Omanis within the skilled Omanis within that growth stage, which will impact no one. Probably it will create a lot of opportunities for investments, for new projects, and for the newcomers. And as I said always, I think we are in the middle of area where we have very good access to talents, either from Oman itself, from the Gulf, or from Indian sub-ocean countries overall. So we have very close access, which could be considered reasonable in terms of cost. Again, I think the perception was number of these regulations were limiting investments. It was not really true. It was designed to restructure the policy to support the private sector and reorganize. Any serious investors coming to Oman will not find this really a challenge, and a lot of flexibility and incentives have been offered and privatized in terms of local support. And one maybe very basic example that Ministry of Finance with Ministry of Labor is doing is the training that end up with employment. So the government spend money on those talents who need to be upgraded in any technical skills required by the private sector for 1 year or 2 years. Sometimes they compensate as well their salaries during that period, and they become ready for being in the market, which end up really utilized by these international players, not only in Oman, some of them really taken outside Oman to do their job. So these are kind of examples of the initiatives that we have done overall.
That's quite impressive. And so I think I'm going to open it up now for 1 or 2 questions from the audience, and then we'll have to close because His Excellency is quite busy. I see Justin is like ready to raise his hand. Or okay, Justin, and if you would like, okay, we'll take 3 questions back to back, but we're limited on time. So Justin, the lady behind him, and this gentleman here, please. Yeah, you have the microphone, okay.
Thank you. Sorry to ask another question. Your Excellency, Dania explained and you discussed how successful Oman has been in fiscal consolidation in the last 5 years. And we've seen the results on that, you know, with the improvement in your rating and the very low spread you issued us with last week. A decision was taken to focus on the fiscal balance and using the surplus to pay down debt. And I've had discussions with Omani friends who've said they wish a bit more was spent on capital expenditure. And there's even a line in the budget, I think it's about 500 million rial for projects for developmental impact, which I don't think has been drawn on. How do you balance that going forward? Do you feel you have space now to invest more in CapEx? How do you balance those two priorities? Thank you.
We're going to take them back to back, so to save time.
Hello, my name is Halil Azzi. I know that in the recent years, Oman has opened up work permits in lower skilled work or roles only for Omanis to encourage greater workforce participation. In the ministry's effort and the government's effort to increase high-skilled Omanis taking higher-skilled roles, are there initiatives that have been done in that way? And my second question is related to earlier in this conference, a panelist had mentioned that Oman is looking to diversify because it will be running out of hydrocarbons within the next decade. Is this a legitimate concern for Oman or not?
Okay, one last question, if we can get the microphone up here.
Thank you. Actually, very quick question and a very quicker second question. The first one is, what's the percentage of completion of Oman 2040 vision right now? And the second question would be, what do you want from the American administration? What is your national priority that if President Trump was listening to you right now, what do you want? Thank you.
Interesting question. Okay, so Your Excellency, we would like you to respond to the three questions.
Well, I think the answer of the first question is the physical rules. We are introducing in our new 5 years plans, economic development plan, which will start in 26 until 30, a very clear fiscal rules, which depends not only on debt repayments, it depends on creating buffers as well for the government through higher reserve. And higher reserve mean for us more investments or more funds allocated for our investments arm, Oman Investment Authority and others, more reserve within Central Bank of Oman, more reserve into our oil and gas production arms, which enhance the spend. All of this has to go into a very equilibrium formula that will work in. This year, honestly speaking, we enhanced the capital investments. We had a number of social projects which were delayed for 10 years. We want to close, we want to complete. We put more pressure. We increase the spend on the social aspects. We want to give more scholarships. We want to enhance these benefits for those who are seeking jobs and train them. So we did a lot of this within the range, within the acceptable range we specify at the beginning. So we know this is very critical and it has to happen. We are very ambitious with the next 5 years development plan, which we think it will prove that growth with these limited resources still are possible, and we are working on that currently. Second question about the high skills worker. I think a lot of Omani now are graduates, so they have minimum of bachelor, minimum of diploma. We have as well introduced the occupational studies. We increase as well specialized programs for scholarships in certain areas. All of this now we are trying to do with the private sector engagement. We think the government cannot play that role alone. We have to test the labor market. We have to test the need of the private sector itself. So whenever we invest on these talents, we find the right place for them as well to be injected in the production cycle. So this is happening. I'm very proud, honestly speaking, with the number of initiatives, the regulations as well that have been updated only to support all of that so far, and we continue to do so. I think this is an important element that the nation is looking for, and as well we are committed to deliver. If we talk about diversification, we are not doing diversification because we will run out of oil. I think it's a risk that is happening around us in the region, probably beyond that. However, we think we have the capacity and the opportunity to enhance the alternative energy production, and maybe the team, Mohsen and the team, in the next session will talk about this more. Oman is blessed with very unique, probably, aspects that enable them to be the best hydrogen production facility if it happens in terms of technology, using alternative energy to introduce electricity and power, and now we are connected to the whole Gulf grid where we most of the time export energy. We want to be a green energy hub as well for the industries, so by that we will be able to attract industries into Ad-Duqm or Suhar or Salala. We are as well blessed with a very unique logistical place where we have a full infrastructure with very advanced facilities, ports and airports and others. So, and the trains now with the other Gulf states is an additional thing on that. So all of that is happening at the same time, not because we are shrinking. In fact, we are increasing our production of oil and gas. We are trying to increase our buffer on this. We are being more efficient in even utilizing new technology to be lower in terms of cost of barrel. Two final questions, where we are from our targets on 2040. I think we achieve a lot of our targets, especially those linked to the international KPIs. So environmental, for example, we jumped from 140 position in the international environmental KPIs. Now we are in the 50s. We achieved number of that in the credit rating, for example, and quality of life, sustainable approach, improvement in the health and the education. A lot of improvements happen. Are they as per our ambition? No. We are trying to accelerate all of these, and that's why they were very clear accelerating programs on all of these aspects. Digitalization was a very good example of that. So we managed to achieve a very good proportion of the targets that we are looking for, and this is with full transparency are offered for all to read where we are in the KPIs. What I need from President Trump?
This is the one we're waiting for.
Yeah, probably to win the Peace Nobel Prize. I think the world is in a sensitive age. Free trades between countries are very important. Security and safety and peace is important for investors to take their right decisions. Very important to have this atmosphere to enhance the global growth. We benefit honestly from global growth of the economy, either within the Middle East region or within our partners, US, UK, India, China, all others. We are friends of all countries, honestly. When it comes to investment decision, it requires kind of stability and removing uncertainty. And this is what we are looking for. So if there's more stable words, very clear rules of games, very clear as well expansion atmosphere that is giving security and confidence for the investor to take the right decision, that is in our favor. And this is what we think US can really play a major role on that overall.
Well, on that note, Your Excellency, thank you so much for your time and your efforts to come with us today in your very busy schedule. And we're very pleased to have you. Actually, we have a small token of appreciation for you coming. And I'm sure you're very familiar with this. This is a Dow, which is an important symbol for Gulf economic history. And even Oman, which was a top country, historically speaking, in trade and engagement for a very long time. And actually, a fact is, Oman is the first Gulf country to engage the US and actually have a trade agreement with the US, which nobody ever recognized. Everyone always goes back to the Quincy meeting with Saudi and the US, which was a very important meeting as well. But Oman was the first one to trade with the US. So here you go, Your Excellency.
You very much.
Thank you.
Thank you for this.
Thank you so much.
Well, now, ladies and gentlemen, we're going to break for lunch in the back. We plan to be back at 1:40. I think we might be a little later on that, but please go back, enjoy your lunch, and talk amongst yourselves.
What time is it now?
It's 1:18.
1:18. Oh, okay. So maybe 2 o'clock.
I gave you the high sign. It's a real pleasure, sir. Thank you. Done quite a bit.
Hope we cover it well in a
Yes,
short
it
period
was
of time.
excellent. It was a great conversation. Thank you so much. And you touched upon the key points. That's easier for also the audience to consume. Sometimes it can be hard in this kind of work. The paper said 10 more minutes. Oh my God. Accent? Oh, thank you. An American accent.
Sound more American than
I am. I'm born here. It's kind of like instilled in me. Do you know Princess Noor?
We've met a few times, but yes.
Oh, I'm so sorry.
No, that's all right. I'm forgetful. Eminently so. Thank you so much for coming.
I'm glad that it was
Yeah, it's, people forget how easy it is to get back and forth. In the 90s, before 9/11. No, it was very easy. Actually, the airplanes used to be able to just sit on it. There was a plane every hour. Yeah, the shuttle. And you would sit on the plane by your ticket. Yeah, it was the low side seats. It was $90 every hour on the hour. And just buy your ticket off you go.
I lived in New York, and I moved back for like 2-3 years because I missed New York so much. But now I don't. Yeah, it's really convenient to do it about 3 hours. Yeah. And as soon as I arrived in New York, I had so much time to just sit. Oh yeah, I studied there for disaster. Right? So I was literally like, now I'm trying to sit.
Well, in New York, so I went to college just over Philippines, and a lot of it's quite scary. No, up the Hudson River, New York. But literally the first time I set foot in New York City was with, I shared a hotel with Mike Pompeo.
I thought you were going to say about me. I'm like, I don't remember this.
Yeah. No. We were wandering around Manhattan. It was scary. Yeah, we're just like bebopping around in Times Square. Like, so the city's got a lot of accessible. I can't imagine thinking you're going to be doing scholarship in this city.
Well, okay. It's great for intellectual engagement. So many diverse systems and art and everything else.
said, the policeman said that 60% of the cars 17. They know who the people are. It's just that, it's like, minor things. Well, no, they catch them, but they won't incarcerate them because it's all minor, and so they go in, they get, you give this guy a ticket, they're crazy. Yeah, so it's just, but yeah, you're right. I'm saying, why did you spend in New York the same way? You went to graduate school in London, so I I managed to pull it off. I'm not saying it was easy. There were certainly other attractions to keep you guys.
She's your cousin. I didn't know that. So you guys really did your adventures together because you founded the organizations together.
You should write a children's book on the two princesses in New York. It could be like a follow-on to Eloise.
Actually, it's a good story.
Yeah.
Because we started, we always had we started thinking about together after our graduate studies, especially as we were studying. We realized that there was a lot of convergence. And that's where it all started.
I visited her in the institute. Yeah, I don't remember a while ago. And she has a rescue dog, stuff like that. It was so impressive.
So when we established our first second, but then finally our people, our number one goal was how to make it as uncorporate as possible.
Yeah.
That was literally our number one KPI.
Yeah.
Just like
and it was very clean. Yeah, it's like plain salon.
Whenever people go to Riyadh now, I'm always like, God, I wish you'd gone 10 years ago so you can see how much it's changed. Unbelievable. I get lost. I'm like, what am I? I don't recognize this thing.
everyone gets lost. Like Saudis get lost.
Well, the other thing that
it's like the New York of
well, the other thing
because New York, it's static. You can't change.
Yeah, New York doesn't change.
A place pops up maybe.
Yeah, New York doesn't grow. You don't find a whole new neighborhood.
And like a few months, I think you're there, 1 month, 2 months, they just like, where's the road? It disappears. It's like a new road.
You're like, what park? There's a park. What is this? So I got lost going to the general store. So all my landmarks were just gone. Didn't know where I was. So it's amazing. So then the other thing, of course, is I remember I had this moment when I knew it changed. I was renting a car in the airport, and I realized the person talking to me was a woman. And she said, "Well, let me go show you the car." And then when we got here, I was like, she didn't have a scarf. And then I was like, are you letting me? I'm not Saudi. I'm like, okay, so she walked with us. It was just like, oh my God, I'm in Saudi Arabia. I can't believe this is happening.
It's like this whole population that was just waiting to come out.
Yeah. And there's something I've lectured on, so I need to write an article on. So there's a military, like the Saudi Navy. You know, you got to go to sea for like 2 weeks to be a good Navy. The Saudi Navy couldn't go to sea for more than 3 days because the enlisted sailors, they're like, well, my wife has to, she can't go to the shops if I'm not there. You know, if you're an enlisted sailor, you can't afford to hire a driver. And now, I mean, the knock-on effects are profound. Actually,
I'm jealous of all my Saudi friends. They're all like traveling everywhere. Like my friends like, I'm going to Korea for the weekend. Do you want to come? I wish I have the kids. I can't go anywhere. But they're like having a blast. It's on air. There was comedy something. So I wanted to go. I was trying to go. You were there at the time. I didn't go to it, but I really wanted to. It just happened.
Is that in a stadium or indoors? The comedy thing.
Comedy show. It's like a comedy week.
Yeah. Oh, okay.
Yeah, of course it's
The weather is really nice.
Yeah, that's true.
You want like to eat? Oh, okay. Yes, please take your time. Okay, enjoy. Oh yes. Oh my God, he's been waiting for the mic the whole time. I forgot about it. It's good you didn't leave it on. Everybody.
Oh yeah, you were muted. Yep.
Okay, well I'll let you to it.
So one more panel, yeah.
We have a conversation with the princess of Vietnam.
Okay, let's watch it. to you.
Yeah, I will. I'll tell her to come to you.
Yeah, I just wanted to thank you for the invitation and the great conversation.
Thank you for coming.
Yes. Yes, yes. It's good to hear from the from the team, your challenges and the opportunities that we
Yeah, it is. It's good amount. So I definitely get a lot of it.
No, I agree, and I need to give the spotlight. So it's basically energy for the molecule industry, but it's very significant yes, it's very innovative. Yeah, we're very
Well, good thing I didn't say anything embarrassing.
No, it was a casual conversation.
This is Rachel Sick.
It's such a pleasure to meet you. I'm glad we're going to be having a conversation. So glad you could join us.
Oh, yes, oh, no, I just to say that I come
Oh, no, I'm so happy to have you. Yes, you're not going to grab anything to eat?
Well,
you should, yes, you should. Maybe that's fine. No, so I
no.
Yeah, that's always a challenge.
Should I already be seated there? Or
Yeah, why not? Okay. Make it easy.
And Dave, how are we readjusting? When should I try to put it?
Yeah.
This is like every Saudi's challenge.
Nice. So Daniel, we'll go to, we're starting at 10:43, so well, we're 10 minutes, we're 15 minutes late, so why don't we go?
Oh, plenty of time. Yeah.
To 2:15, okay, good, we'll go to 2:15. Okay, well, ladies and gentlemen, welcome back. If you could please. Okay. No, that's right. Okay.
Yeah. This isn't great for a short walk. Sit straight.
So I know it's after lunch, and usually there's a food coma, but we are actually so excited to welcome Her Highness Princess Noura bint Turki Al Saud. She is a visionary Saudi leader and founding partner at Aeon Collective, a cross-disciplinary endowment championing sustainability, equity, and inclusive development. And I actually had the pleasure to visit her there, visit Her Highness there. It's a really amazing place, and actually the place itself reflects the mission in its design. It's really amazing. With nearly 2 decades of experience shaping the dialogue on energy, climate policy, and sustainable growth, Her Highness has been a leading voice in advancing climate-aligned energy strategies and the development of the circular carbon economy in the kingdom. And you know what's really important to underscore here, Her Highness has worked in this field before it became a trend. So you could see the passion about this field. Through her leadership at Aeon Strategy and Aeon Collective, she bridges science and policy to promote innovative, environmentally conscious approaches to national and global development. Her Highness holds a master's degree in international affairs from Columbia University's School of International and Public Affairs, and continues to serve on several distinguished boards and initiatives dedicated to advancing sustainability and knowledge-driven policy. Without further ado, welcome. This presentation will be moderated by Rachel Ziemba. Rachel Ziemba, I've been following her work since I was a student, long time ago. And we always admired her work. I never told her that. This is the first time we're saying this. But She's one of the foremost experts when it comes to economic assessment, risk assessment, energy issues, sanction issues. I mean, you name it. She's an excellent political economist. We're very pleased to have her at the forum as a non-resident fellow. She's also at the Center of New American Policy as an adjunct and teaches at my alma mater, NYU. And actually, when I was at NYU, I followed your work. So without further ado, I would like to welcome Rachel and Her Highness.
Fantastic. Thank you, Danya. That's very kind. And I'm honored to be speaking at this event. I'm honored to be having this conversation with Princess Noura, and I guess we'll have a conversation up here. Can you hear me? Sorry about that. Let me figure that
I'm not here.
out. At the top. Apparently it was not. Sorry about that. Thank you. Now, okay, that I can now hear that I'm properly mic'd. So apologies to those of you in the room and those of you online who couldn't hear before. Dr. Thafer has sort of introduced much of Princess Noura's background and her role at Aeon Collective. She also spent time at the King Faisal Center for Research in Islamic Studies, where she headed the Energy Studies Unit, and is currently involved in KAUS Circular Carbon Initiative. I'm sure we'll come back to circular economies. And plays a role at the EIA's Energy Efficiency Industry Advisory Board. So we're going to have a conversation up here. I'll ask Princess Noura a few questions, but there will be, we hope, time for a few questions. So give some, give some thought to those, we'll take it from there. So just to kick off, and we were having a little chat in the break about the policy environment, both here in the United States and globally, and as well as in the Gulf. So I'm very interested in, from your role at Aeon Strategy, how do you see Gulf states in general, and maybe Saudi Arabia in particular, leveraging circular carbon frameworks, circular economy? How is this a part of balancing the trade-offs for carbon goals and general industrial policy? Mm-hmm. We talked in the last panel about how important adding jobs, adding growth, quality growth is. Where do these sort of investments fit in?
Absolutely. Well, first of all, thank you very much, Dr. Danya, for the invitation. It's such a pleasure to be here with you today, and such a pleasure to meet you, Rachel. Maybe to contextualize your question a bit more, it's important to go back and see what the context was like in the kingdom. What was the economic dynamic? What was the political economy, or the state of the political economy? And I think His Excellency, the Minister from Oman, spoke about that. Are the Gulf countries dependent on a natural resource, single source, whether it's oil or gas? And in the context of the kingdom, we're no different than any of these on the other Gulf countries. The difference is maybe the population dynamics, the political system, and the uniqueness of Saudi Arabia with its size and its population.
Sure.
And to that end, we could see that since the 70s, there have been multiple development plans, 5-year development plans, each and every one of them focused on diversifying away from this resources. So it's not something that's novel or new. There was always this realization that we cannot be held hostage to the fluctuations in energy prices. However, given that there was a lot of revenues coming in and it was a very comfortable situation, we kind of reverted back to that. There was a bit of efforts here and there to diversify, but the focus still remained on the single natural source that we had. Fast forward to 2015, there was a change in leadership, but at the same time, there was the shock that happened with the oil prices of 2014. And I think what was different about what happened in 2014 versus the earlier years from the 80s and 70s and all the different oil shocks there, is that with the new leadership, with the realization that our population has been changing, and it reached a point that it made a big 70% of our population was a young population, and there was a realization that we needed to do something, and we needed to do something large and big. And it's not about having ad hoc projects here and there. It was really a whole of a society, a whole of government. We had to flip our economy over on its head. And we had, thankfully, a young, dynamic leadership that pushed through with Vision 2030. I'm sure everyone here knows about Vision 2030 already. And I think that was really the point where everything started to transform. Now, I'll get back to that later and I can emphasize a bit more, but the reason I mentioned this, and coming back to the circularity and the kingdom's efforts in more sustainable energy practices and looking at the environment as a core pillar of our economic development and our social development plans is because of what happened in 2016 with Vision 2030. Prior to that, our focus was on maintaining our energy primacy in oil and protecting that resource. When it came to sustainability, environmental sustainability in particular, when it came to the climate challenge, we were more on the reactive side, and we were kind of taking it as it goes, rightfully so, protecting our resource and all of that. Now, come Vision 2030, everything started to change. We identified through the multiple research efforts, economic analysis and studies, the importance of the environment, the importance of building resilient structures, the importance of looking into the future about, what does climate change mean? How will this impact our region? How will this impact the country? But also looking at how do you preserve the ecosystem in the kingdom, because that is a big selling point for the focus on alternative income for the country, which includes tourism. Like nature tourism is a big factor, protecting our culture, our heritage. And a big part of our culture and heritage is the natural environment. People think Saudi is a desert, but in fact it is a very diverse ecosystem. If you go all parts of the kingdom, you go north, south, and you have the Red Sea. So we have a very rich natural ecosystem there. And so I think this created the right enabling environment for our institutions to think beyond the traditional way of protecting a natural resource and thinking, okay, how can we be proactive? We see that the world is changing and evolving when it comes to energy policy, when it comes to climate policy, but more importantly, we're also seeing the new developments that are happening, and it's not purely, all of the different parts kind of came together at the right time. And it was also at the time of the UN Sustainable Development Goals. So even Vision 2030 happened in alignment with the Sustainable Development Goals, taking in the Sustainable Development Goals, localizing it to the national ecosystem, and what does it mean for the different regions of the country? How can you embed it in there? So when we talk about climate, when we talk about the circular economy, it's not about just looking at the energy sector or the sustainability of the energy sector in vacuum. It's really how do you develop and how do we plan for an integrated energy system that is going to be spreading its veins or going into every aspect of the Saudi economy, into every aspect of the Saudi social structure and social system. And I think that was the fundamental difference in why the kingdom, and also I think you can say something similar about the other Gulf countries, and how did the circular carbon economy come into play? How are circularity practices becoming, and why are they becoming more and more important? It's because of this. It's because of this realization and the foresight of our leadership to actually make this transformation, which was a daunting task. It's not easy, and we've seen how challenging they were, and a lot of people had doubts and questions, and we've seen it all over the place. But what if? Will this happen? Will it? Thankfully, we are seeing this happen today. And so from that, as things evolved, as Vision 2030 was solidified and institutions started to look internally and see how they can align with the targets and the pillars and the goals. It's about a thriving society, a vibrant society, a thriving economy, and you can't have a thriving economy without a vibrant society, and vice versa, right? So it's really interlinked to one another. And so this is where innovative thinking came about. And with the appointment of Prince Abdulaziz bin Salman, His Royal Highness, in 2019, he first announced the concept of the circular carbon economy as it relates to our energy systems and energy sectors. So how can we be proactive? How can we be a leader in this challenge of addressing climate change, but at the same time maintaining and ensuring energy security, energy affordability, and energy resilience, and thinking about it pragmatically.
On that point, are there any specific cross-disciplinary projects or other things like that that you would point to as being either particular turning points or things you're particularly proud of, or any signposts that you would have people outside of the region watch for in the coming years?
I think there are multiple spaces or areas you can focus on the technologies. And to me, one thing that I was really excited about in the early, 2012, 2016 was direct air capture. More broadly CCUS, but then direct capture as a part of, carbon utilization and managing emissions. And I think there, under the circular carbon economy, it kind of opened the doors for and pushed some of our, national champions and the wider ecosystems to really think about this very seriously, and we've seen the establishment of the CCUS hub in Jubail. It's a subsidiary of Aramco to really capture the CO2, whether it's in point source or using direct air capture plants and injecting it. And that's an innovative, one of the most difficult and challenging areas when it comes to carbon management, just because of the costs. I think when it comes to energy efficiency, that's something that we've seen, again, spearheaded by His Royal Highness President Abdulaziz bin Salman since the early 2010s to 2012s, even before Vision 2030. He was really thinking about, okay, how can we enhance our energy efficiency because of the way the country was using up its energy and its natural resources. And I think this has two effects, right? One, it's the impact on the natural resource itself and maintaining it and enhancing its longevity. But on the other side, it was also a way to bring in the population, get them more involved into the local economy, into what goes into this, into what the impacts on our environment. So there were the price issue, right? And with the price reforms that happened, that created a lot of awareness. At first, it created like a sense of like a foreign environment, like why are things changing for us? But then people became more and more aware with all of the different programs in terms of how do they support them with the incentive programs to enhance energy efficiency, to purchase more energy efficient products and all of that. The population became more engaged and more aware around the challenges that go into and the government face in terms of maintaining a stable economy. So I think it was a turning point for Saudi society and how they are more engaged with policy making, or at least understanding of how policy changes. And for me, I think this is something that's really important. The other would be on the agricultural side, right? Because agriculture relies on liquid fuels. A lot of our small farmers rely on diesel just to power their generations. And so there are a lot of programs
and the fertilizer needs.
All of that. So there are a lot of programs between the government to support them and working, very closely with the Ministry of Agriculture, the Ministry of Environment. So there are a lot of cross-institution collaboration, further strengthened by the wider ecosystem that enforced, integrated governance within the kingdom. So I think these are things that are really interesting to me, seeing how things kind of blend into each other and how each ministry is supporting the other. And of course, it goes without saying the integration of the energy sector into the mining and industrial sector. This is something that's really important. We were just talking about this a while ago, about the needs for energy to power data centers, energy for industrial processes and industrial
the electric vehicle industry, the kingdom.
All of the above, right? And then you get into the challenges of, where do we source? How do we, source our minerals from? How much can we produce in Saudi? How much do we use in the kingdom versus how much do we import? How do you create strategic relationships with other producers and ensure that there's a resilient value chain there? Because again, I think the challenge in the future is not about energy security in terms of a natural resource, it's about the security of electrical systems. And the security of electrical systems are very much reliant on, if we talk about it from the original source, how do you get the right resources? How do you get a hand of the minerals there, and how do you go through the value chain, which would take on average 14 years to develop. So I think there is really where a lot of innovation is happening between the Ministry of Energy and the Ministry of Industry and Natural Resources. enhancing efficiency, using technologies to enhance operational efficiency, enhancing factories, current factories, and new and upcoming factories. How do you equip them to become more to absorb the changes in technology, because technology is evolving. So how do you develop them in a way where they're built at the highest standard, but then you can always integrate AI and new technologies as they become available to enhance this efficiency, whether it's operational efficiency, uses of energy, and etc.
You mentioned the collaboration across ministries and the like. And the need to communicate well to the population, also bring in businesses, right? And I know one of the tensions in the kingdom is in part wanting to do things fast. Sometimes then the incentive is to utilize and develop through portfolio companies, and there's a lot of positives and negatives, but are there any either sandboxes or innovation hubs or other sort of places that you feel are sort of good lessons learned for private or quasi-private sector sort of involvement here?
I mean, I think all of the big developments in the kingdom, the giga projects, have their own needs and their demands. So through the creation of these big giga projects, that's creating the demand to really bring in, ventures, to bring in small companies, tech companies to invest. But when you're looking at the bigger systems, the bigger projects, you really need government to de-risk that, and then bring in the private sector to kind of play the role that they're supposed to play. And as they evolve, and as they mature, they will then take up a bigger part of that. But initially, in order to prove a concept and to prove that, and to understand what the enabler environment is, it's one thing to have it on paper and say, oh, I need this and this and this, and these are the right policies. It's another thing to test them and put them on the ground and then start figuring out and adjusting the policies to be able to be fit for purpose. And I see the enabling environment in the kingdom evolving, and the way I see it, and the way it should be, is policies should be catalytic. They shouldn't be there just stagnant. I'm going to put this policy for the next 10 years and then let people figure it out, right? It's there. They, stakeholders sit with government entities, semi-government entities, and they try to find ways where you can really enhance impact. And I think that's where, as you said, we want to see things happen fast. But so you kind of have to play around and see where government has to come in, where a government-backed company has to come in, and then where can you crowd in innovation from the entrepreneurs.
Sure, and it's a balancing act, right? Because you can't, you need enough signals to, whether it's publicly owned companies or privately owned companies, to sort of make those long-term investments, but then realize where are the bottlenecks, right? Where are the things that either need to be de-risked or the things that are sort of blockages. Now, we've talked a lot about
and they're all creating demand, by the way.
Sure.
Like you see it within the Ministry of Energy. They've got a sector on innovation and AI, and you see a lot of venture firms coming in, supporting them. So these institutions, yes, they are government, but they in themselves are creating demand for the private sector to come and thrive, whether they're local entrepreneurs or they're international ventures and firms that are coming in to
I know we're coming to the end of our time, and you also have a train to catch. Are there any parting thoughts you'd like to sort of leave us with? Any calls to action, any things that you would like, either in partnerships with sort of the U.S. or the region? I know that's about 5 questions, so don't need to answer all of them, but gives you optionality about what to talk about.
Honestly, I mean, I've been working in the space as a private citizen. I've never worked in government. I work a lot with government and government entities and have tried to push for certain policies when it comes to sustainability, not just environmental, but really looking at the economic and social justice and sustainability as the main driver of the work that we do. And I'm really proud to say, that I'm proud of the changes that we're seeing in our country, and it's really a game changer. And I see that, innovation and change will happen there because we look at the long term, and we're happy to adjust and change and, manipulate things as we see fit to serve a purpose and reach our goals and our targets. And I'm really seeing the opportunities there. And I know that there are a lot of conversations happening, about, okay, what is the enabling environment? We are lacking X, Y, and Z. Investors needs 1, 2, and 3 to come in and be more incentivized. Well, that's great. Come in, talk to us. And I think what's great about whether it's government entities or local institutions, everyone's open to these conversations, and they're very receptive to these conversations. So. I think it's a really ripe time for collaboration, whether it's Saudi with Western countries, Europe, the US. We have a strategic relationship with the US, and I see this being strengthened even with the economic incentives we have, but also with the East. And we're diversifying and looking at opportunities everywhere.
Fantastic. I think that's a great way to end our conversation. Thank you so much for your time, for sharing your insights. I'm sorry there wasn't time for audience questions, but hopefully there will be time for further engagement on all of these critical issues. I will, for the audience, we will be transitioning very quickly to the next panel, but I will hand back to Dr. Danya, or maybe to Dr. Dave, I'm not sure who, for the next phase.
Thank you.
Thank you so much.
We'll be transitioning right now to the next panel, so if you'll retain your places while we briefly reconfigure the audience and mic up the participants.
I'm just later.
Are you
I'm on this next panel. Okay.
and investment as the driving forces of Gulf futures. It's my pleasure to welcome Ms. Valentina Pasquale, Senior Editor at Arabian Gulf Business Insight, who will guide our distinguished panelists in today's discussion. So, Signorina Pasquale. Daniente.
I've been already introduced as an Italian, so I apologize if I butcher names, but that's my excuse. Thank you very much for joining us. You've made it through the end of the day, and that's amazing. I think it's been a great conference, and we hope this final panel can be a real treat for you in terms of bringing together a lot of the things that we've discussed in the morning and over lunch. Valentina Pasquale is my name, and AGBI, Arabian Gulf Business Insight, is a new startup. We're about 3 years old. We're based out of Dubai. We have an office in London, reporters in several countries. I'm here in Washington. We cover everything, trade, investment, business, that directly or indirectly affects the Gulf as well as the wider Middle East. I'm really honored to be here today. We have a great lineup of speakers, whom I'll introduce in a second. We will be discussing some of the hottest topics out there and really top off the conversation that we've seen. Essentially, we're going to be looking at how Gulf states are really trying to up investment in innovation, whether it's climate tech, semiconductors, healthcare tech was mentioned this morning. At this time when they're really pressing the accelerator on their drives to diversify their economies away from hydrocarbons. I'll open it up with a couple of questions for each of the speakers. Then we'll move to, if we have time, get some audience questions and some final remarks. We're a bit late. I don't want to go much past beyond 3 p.m. We can play it around 5 minutes or so extra, maybe. As for the speakers that are with us today, Director General Mohsin Al-Jabri of the Oman Net Zero Center, an institution that's been around for almost a year, and he will tell us more about it. Rachel Ziemba, whom you've had the pleasure to meet already in the previous conversation. She's a macro strategist out of New York and a non-resident senior non-resident fellow at Gulf International Forum. And joining us online is Dr. Abdullah Babood, who's an Omani academic. Currently holds the chair of the State of Qatar in Islamic Area Studies, and is also a visiting professor at Waseda University in Tokyo, Japan. Thank you very much for being with us. We have heard all day how extraordinary of the time this is for the GCC and the role it plays in the world. It seems to me that so much that's happening there, from artificial intelligence to sustainability to critical minerals, it really is also at the forefront of sort of the top global economic trends. And so with that and without further ado, I wanted to open it up by asking the Director General, Mr. Al-Jabri, sort of the view from Oman on sustainability, the work of the Oman Net Zero Center, but I want to put it in context of the fact that it seems to me that sustainability has perhaps lost a little bit of its shine in the past year or so, especially with the return of President Donald Trump to the White House. He clearly favors what we can call an all-of-the-above approach to energy that has turned a little bit away from renewables, much more friendly to fossil fuels. So what does that do to efforts that you're sort of driving to raise capital and to promote investments in the transition and in green energy? Are there new mechanisms, initiatives, policy changes that you're exploring?
Thank you very much for the introduction, and very glad to be part of the session. Actually, this is very difficult question usually when you are talking about the current setup and the international setup. With the what's happening in US, I think that's something very critical. However, whenever we are talking about climate resilience or the decarbonization, we in Oman believe that this could come with opportunity for the country. So how we can unlock this kind of opportunity, diversify our economy. Here today, His Excellency, when he was talking about unlocking certain kind of business opportunity down to the country. And I think with that, when Oman announced the the net zero target by 2050, and also the directive from His Majesty, they form Oman Net Zero Center in order to drive this further, down the road and ensure that we will have the balance between the environmental benefit versus social and also the economic setup. And I think we were doing a lot of, internal assessment and analysis, and we come across certain kind of mechanism to bring the best kind of investment to the country to enhance our setup. And I think with that, keeping in our mind that there's certain kind of clauses within Paris Agreement which enable the developing country to get tap into the low cost of capital coming from developed country to support the transition toward the net zero target. So I think that was in our mind when we started, but at that stage it was very difficult because we did not have the right project to go and ask or seek for this kind of international funds. In addition to that, you already mentioned the sustainability, because sustainability is very critical. A lot of requirements coming more specifically with ESG disclosure. If you did not do the right setup, you will not be able to attract this kind of finance. And luckily, I was leading green and sustainable finance ecosystem development of the country under Ministry of Finance before joining Oman Net Zero Center. And at that stage, we came to a conclusion. If we did not develop a comprehensive ecosystem for ESG disclosure, we will not be able to bring this kind of investment to the country. And I think that was one of the drivers to develop the whole ecosystem. And it was developed. Within 2 years, we get ESG framework for listed company. It's approved within this year, 2025. It's mandatory for the listed company to, report their ESG disclosure. OIA company also, Oman Investment Authority, it's a government-linked company. They also developed their guiding principle for ESG. With that, when we developed the ESG, then at that time we said, now the best time to go to the next step. Next step, how we could, as Oman, unlock certain kind of opportunity to attract a green and international kind of fund. There were several kind of funds internationally available, and now we are supporting the Development Bank in Oman to become the first accredited entity in the GCC toward the Green Climate Fund, which they are offering, concessional loans, and Oman is part of this country which is entitled for. So I think that's a green finance, something very critical for us, and down the road with the support from the team, whenever we will be ready with a project, we will start applying. Second element, which is very critical, is activating the role of carbon market. Carbon market is another tool of bringing the, capital to invest, for certain kind of activity within the country. And we believe that if we will be able to activate the carbon market in Oman, we will start, by the way, with the voluntary carbon market, but in the future, we will go toward, a bilateral kind of agreement, and then we could also sell our certification in certain kind of compliance market. This will enable also Oman to bring certain kind of capital to be invested for green and sustainable link projects. All of these, it's a great, but yet, to start recognizing the outcome. You already mentioned that the center is very, young, so we only completed our 9 months from the day of formation. We revised our net zero strategy so far. We developed the framework for the carbon market and now in the cabinet for approval. And the third element, we already start developing a pool of projects. Currently, it's around 120 projects, and we know what will be the required costs coming to Oman in order to achieve this kind of for projects. A lot of things happening, and looking forward to see that the outcome of this effort in the country.
This was very interesting, and Rachel, to bring it to you and open it up to the GCC sort of more widely. There was a report that came out last month that suggested, I think it was out of PwC, suggested that the GCC is still attracting a very, very small portion of global green FDI, although there is potential to do so much more, as we're obviously hearing, by harnessing energy resources and the work on renewables. So I was wondering if you could talk a little bit about why do you think there is this gap? Are there, as a foreign investors weigh green FDI in the GCC, how do they balance sort of opportunities and risk? What are the questions swirling around still?
Yeah, it's a very good question, and great to sort of hear about Oman's approach, because I think this question mark about partnering and pooling funds is important. So I guess I would step back and say something before we get into the question of why is the GCC not attracting a lot of green FDI, but to make a point I often make to people who come to me and say, well, the US has changed some of its policies, the development aid is not there anymore. Obviously, China maybe is not doing as many Belt and Road projects anymore. What's going to happen? How are we going to meet our goals? And we're still a long way from meeting our goals. But one of the things I often tell them is that the GCC, especially the UAE, but actually it's a general trend, is actually one of the greatest outbound sources of green FDI. So in this conversation, especially as we broaden this from the GCC, you think about Mubadala and a variety of actors very sort of active in solar projects across North Africa, the Qatar Investment Authority. Now, it's definitely true when you look at the green-related FDI that the GCC sovereign entities, the sovereign ecosystem are funding. There's still the largest size number, amount of money being invested is actually in Europe, in places like that. And Valentina, you and I, we talk regularly about how GCC funds see the investment environment in different parts of the ecosystem here in the United States. So that question mark both of what's the money coming in, what's the money going out, and to where, I think is very active. What I will say is that I do think across the GCC, there is really this all of the above, adding more power, adding more sort of dynamics. I mean, you have some countries that are moving more ahead with nuclear, a lot of countries interested in small, modular reactors. It's a trend I hear also in other countries that I talk about it. So, but you asked, and then, so I think when we're talking about the GCC, there's also, so not only is there this outbound piece, but there's also the question of, well, if there's a lot of domestic government investment or government pump priming for some of the projects, maybe there hasn't always been as much of a scope for foreign investment. Now, I will say that foreign companies come, they're still seeking capital in the GCC. When a lot of my conversations when I was at Abu Dhabi Global Markets, Abu Dhabi Finance Week last week, there was a lot about smaller companies in Africa seeking not only climate tech money, but health tech money and the like. So I think there's some different ecosystems that are sort of emerging out, but there is this element. But in terms of this question of the capital coming in, I think it goes back to the discussions of the previous panel, not only the minister, but the panel we had right before lunch, some of these other different question marks about transparency, and the like. I think there's been a lot of strides, but I think there's probably still more work to be done. When we move beyond climate tech and climate green FDI to sort of other technology dynamics, in both of those areas, I do think there's a bit of a geoeconomic or geostrategic tension. Justin, up on the same panel a couple hours ago, said he didn't think geostrategic risks were a big concern. And they might not be for sort of local domestic, or not domestic, regional political challenges. But I think in this context of US concerns about Chinese role in key supply chains, I do think that there is a factor there. And in some segments of the tech ecosystem, there are parallel processes. Investment funds set up that will invest almost anywhere but China, or will bring in technology from anywhere but China, and those who will involve that. So I do think that is a challenge that different countries and projects in the GCC have to face with, just as those in other jurisdictions have to. And so in the renewable space, we have the dynamic where wind and solar technology very much dominated by China. And then when you get into the AI-related projects and a number of other strategic issues sort of can come up, and we'll see where that goes. I would imagine delegations from some of the GCC nations here in town this week were hoping that they could sort of make some progress on chip agreements and just in general AI project development. I've moved beyond that, so I'm going to stop.
No, this is great. Thank you very much, because I actually wanted to
You want to segue?
Focus out a little bit on the geostrategic area, and I wanted to go to Dr. Babood, who I thank you so much for joining us remotely. I believe it's quite late out there, so we really appreciate it.
Yeah.
And I wanted to ask your help to situate where we are when it comes to sort of investment in innovation in the Gulf. What I mean by that is we're here in Washington at an extremely interesting time in so many ways. The IMF meetings are going on this week amid an ongoing global tariff war and a lot of uncertainty surrounding where that goes, with implications for consumer demand, global consumer demand, oil prices. OPEC Plus has been unwinding production cuts, with also repercussion on oil prices. We've mentioned President Trump's sort of new approach to policy across the board, including on energy. And of course, the geopolitics of the region of the Middle East are ever surprising, ever changing, ever complex. Perhaps we'll touch a little bit more on what's happening later. But right now, I wanted to ask you, through all this chaos and volatility, the Gulf states have been, seems to me, a rather steady hand in what they're doing. They remain quite focused on their diversification pushes. How do you think they see this really sort of confusing, if you will, external environment? Is this a threat to their programs? Is this an opportunity to stand out?
Thank you very much, Valentina, and good morning or good afternoon to you. Yes, it is a bit late, but it's a pleasure to be with you. Well, I think the short answer to your question, Valentina, is that the Gulf states obviously see what is happening now in terms of current turbulences. They see it less in a negative shock, but they see it more as a stress test and an opportunity. This is a moment that perhaps forces them to adapt strategic recalibration, accelerating of their long-standing innovation and investment plans and standing plans. And they try to balance the risk with the reward. Obviously, with different levers that different Gulf states can employ. So the challenges, they are there, but they are not paralysis. The Gulf states are actually acutely aware of these risks. They see global trade tensions, especially between US and China and the friction there. They see the shifting US energy policy, climate pressure, and the volatile regional security. All these poses serious threats. And if you add to that the reduced export demand on their oil and gas, also adds to that and can affect capital flow and investment. And if you add, you can also combine that there are some diplomatic shocks we have seen recently, and we've seen some there are energy transition costs that are involved. But rather than reacting defensively, we've seen that the Gulf states who are already trying to diversify their economies away from being dependent on oil and gas, these challenges have become as a force acceleration for them, for their structural transitions. They already believe that they need to make this. So in this view, they see the world is normal. It's a new normal. There is always going to be multipolar economic blocks. There's going to be strategic competition. There's going to be internal fragilities. There's going to be disruption to supply chain, and there's going to be, regional geopolitical fragmentation. So they seem to be exposed to these shocks, but they have learned how to absorb these shocks and and diversify their economies and accelerate this diversification process. So this global power competition actually forces them to do so. And in a way, they could look at it, and they do look at it in a positive sense, because this geopolitical competition enables them to have strategic space to maneuver and position themselves not as just energy producers, but as trade and technology hubs, and they can play a very important intermediate roles. So rather than duck and cover, they tend to pivot, and they hedge and compete, try to shape a favorable trajectory rather than be buffeted by all these challenges. So I think what we are seeing here is these global challenges are making the Gulf states think hard, work hard, and especially on their energy transition, which they see it as both a constraint and an opportunity. They are working very hard in developing their technology hubs and AI and sovereign capabilities, and they have come up with some AI strategies. And they are also reorienting their trade and logistics and connectivity, leveraging their position between Europe, between Asia, Africa, and Europe, and working as logistical corridors and trade corridors, leveraging their ports and free zones, building some new trade alliances and agreements. They're trying to diversify their partnership to reduce the dependency on any single power block. And some see this trade war between US and China as a chance to capture portions of their redirected trade flows, or serve as neutral intermediaries in this sense. So what we are seeing is that there is some strategic hedging, some diplomatic positioning, and some technical and technological and AI investment. Obviously, there are challenges, but these challenges are, expected, and they are manageable. And it is an inflection point that the world is going through, and the Gulf states are trying to be ahead of this storm, as it were, and they are trying to, rather than shifting, they are preemptively adapting to the situation. They accept there will be losses, setbacks, painful adjustment, but they see inaction. They don't see inaction as a viable strategy. So they aim to shape emerging order in energy, trade, tech, rather than simply respond to it. And they try to blend their conservatism with innovation by maintaining macroeconomic stability and hedges, while nudging towards future transformation. In short, Valentina, they see the uncertainty as a test, but also as a window of opportunity. The ambitions for the Gulf states not to be passive victims of this global shift, but being a proactive actors in them, benefiting from them, and trying to diversify their economies to the new realm, as it were. Thank you.
Thank you very much. This was very, very helpful. Director General, I wanted to come back to you about the transition and investment in the transition in particular. There seems to be, and you sort of hinted at it, but there seems to be a question of scale capacity in terms of having the projects that can make the transition real. How are you working, if you can elaborate on how you're working on sort of creating the opportunities for investors to really come in at a level that is important.
When we are talking about energy, I want just to highlight one critical element. We are a country currently exporting energy. We will keep exporting our energy, and also in the future, we will try to diversify, bringing new kind of energy setup. But we will keep exporting this kind of energy because we are blessed with certain kind of unique setup within the country, enabling us to do so. And I think more specifically when we are talking about the energy transition. In Oman, currently we are executing several of these projects, whether it's a solar and wind, and also we recently float one tender to seek for solar plus battery. Also, we are thinking about solar plus hydropower, hydro storage. So all of these opportunities within Oman are ongoing, and for us, it is great. And more specifically, when we are now connected with GCC grid, if there is any extra power, excess power, we could easily, send it through GCC connection. So I think that's give us certain kind of opportunity, and also open our eyes on very special opportunity available within the region, and we have to keep, doing so. We have to keep expanding within this setup. Second, I know a lot of friends, they don't like talking about green hydrogen. But in Oman, rather than I'm talking about green hydrogen, because I know several times you hear about it, but I would call in the transition period, we do have alternative color of green, I would call it. White hydrogen is there, blue hydrogen is there, and I know people, they don't like talking about hydrogen much because there is no kind of tangible outcome out of this. But what I want to assure for the audience here, Oman working very hard in order to develop this file, ensure that it will be moving toward the execution. Serious discussion now happening in the country for the white hydrogen. It is basically nature-based hydrogen. It's available within Oman, but it's a matter of how you take it to the commercial stage. Second element, Oman is blessed with natural gas. We do have a natural gas. So if you use the natural gas, you capture the CO2, then you end up with a blue hydrogen, which is a mid-term kind of solution before you go to the green hydrogen. So that's also happening in Oman, and also we are putting a lot of energy and time in order to develop this further and ensure it will go to the execution stage. Whatever I mention, all of these are food for the decarbonization plan. So for us in Oman, whenever there is certain kind of opportunity attached with the decarbonization, we try our best to make it faster, accelerate the process, and ensure it will be executed. One critical element I want to highlight: green hydrogen projects in Oman is very critical. It will come down the road. Oman have certain kind of a plan by 2030 to produce 1 million. I know that's something very aggressive, but we are working day and night to make this happening. When technology will support, and I think that's across all the world, one of the main difficulties facing the green hydrogen is the setup of the technology. The current technology is very expensive, and with the time, it will become cheaper. So we don't have to start, thinking about, can I produce a green hydrogen by 2030, reaching 1 million? No. How we can bridge that gap? How we can, transfer ourselves from the current situation toward 2030 with thinking with alternative plan and solutions in order to make it happening. If we keep saying that it will never happen, then we will not start. And I think the first step with Oman taking that serious is having a dedicated team, a company called Hydrom, just mobilized with the right resources in order to drive further the implementation of the green hydrogen project in the country.
We are hearing, of course, a lot about Oman. I wonder, Rachel, if you can discuss, again, going back to the wider GCC and in terms of investment in the transition, but also AI, critical minerals, new, innovative sort of cutting edge industries. Are there countries that are performing better than others? And I don't mean that as a sort of scoring exercise, but more like what are the lessons learned? What are the things that are being done where that others could replicate?
Yeah, and I think in this space, it goes back to, as with anything in economic development, the starting points and the specific endowments and the political economy challenges that different countries in the GCC face. We were talking earlier about Saudi Arabia, and on the panel earlier, sort of dividing the countries into sort of those where not only was there a greater sort of amount of population and the job creation needs are different. But one of the metrics I've liked to use for a long time, maybe back as far away as when Dr. Danya was studying at NYU, was to think about oil wealth per capita, right, as an important metric. And you look at countries like Bahrain and of course, very little oil wealth per capita, but still high reliance in the budget, at least until recently, which was always one of those big warning signs that when I was looking at the debt, I would put. And then countries like Oman that have made this sort of adjustment. But in the region, if we're thinking about the new projects, I see a new phase in economic diversification, rather than just trying to bring new industries, trying to develop new industries that haven't necessarily been developed elsewhere. So I think about, in Saudi Arabia, this goal of trying to develop electric vehicle supply chains, including at home, right? And that ties into the conversation we were having just earlier with this question about critical minerals and critical mineral processing. And processing is really the sort of place, the gap that there really is in the global economy, which China really has dominated. But within that, even setting aside the electric vehicle supply chain, of course, critical minerals are bigger than just battery minerals. There's a whole set of critical minerals that are important in the defense industrial base on a global level. We've seen the UAE, again, back to this outward investment piece, not just inward, invest across Africa, first in raw material sort of extraction, but now in some new processing sort of elements. And this desire also to partner and get technology transferred to then maybe create a technology stack that then can be exported. So I'm thinking about the Abu Dhabi kind of approach to some of the AI projects through G42, where whom I met with back in December. That the goal is to work with U.S. partners and others, but then to be thinking about deploying that across Africa. Right. There was a good report out from Emirates NBD, earlier today that sort of talked about the data center build out across the region, but especially the UAE. I mean, we're talking about not only data centers being built, but the power infrastructure needed to fuel those data centers and to fuel the cooling required to also support both those data centers, but also the fact this is all happening in a world that is warming. Right? I was in the Paris airport yesterday where there were ads for come to Abu Dhabi in the summer. And I said, I'm not sure I buy that. but that was, there were also a lot of Ronaldo's faces saying come to Saudi Arabia. It was a little vaguer which time of year we were supposed to come to, the French audience was supposed to come. But in any case, I digress. But I think there's a lot of different lessons being learned. Even within the UAE, I see a different approach to AI between Dubai and Abu Dhabi, as often is the case with things between those different emirates. And that is partly a function of what's the investment ecosystem. So in Dubai, it's much more private or sort of what I call quasi-private, public-private, entities. In Abu Dhabi, it's a more, sort of the government, the Abu Dhabi Inc. sovereign infrastructure leading these things. It's a little more top-down in that area. And then, as I say, and then in Saudi Arabia, it's a little bit mixed. But again, government-led, somewhat top-down. In that way. And we have Qatar also sort of pushing ahead with investments in this area and investments abroad in some of these sectors. But I do think that the larger the population to wealth ratio, the higher a need there is to really think about employment at different levels of the skills sector. But I think there is an understanding now in the Gulf that there really can't be a competition with these very low-cost, labor-intensive industries, which when I started tracking the region more than 20 years ago, I think there was this whole view of, we can bring back factories from Asia. And I think there was a recognition that maybe mostly, maybe bring the robots too, but otherwise, there's a need to really move up the value curve to create new industries and that way. And I think that that's where AI and innovation is sort of a part of this. There's also a desire to really deploy these new tools to force efficiency in a whole range of industries. And that's something, maybe sometimes in leapfrogging is something that can occur. But I do think there is this concern now, and there is this concern now in who the sort of geopolitical partners, will be, and maybe even some concern about the speed with some things move fast in this town here, even when the government is shut down, and some things move more slowly. And I think on the one hand, I think this is an environment where regional actors welcome some degree of the transactional nature and issue-specific cooperation that may be present in the U.S. ecosystem. But I think there's still a bandwidth issue, right? And I was in mostly just the UAE 2 weeks ago. But I think there was some concern of, they're so focused on China in Washington that they've forgotten that we want to buy chips too. And so I think there's some different sort of tensions, some different tensions going on. And there will be innovations that come out of the point of the crisis point of how do you ration power? How do you ration when costs go up, maybe not domestically, but globally? What efficiencies materialize? We've seen that already with China and DeepSeek, of lack of access to US chips maybe prompts some innovation. So I think that there are hubs, there are sandboxes, there's some ecosystems being developed in almost all of the Gulf countries that maybe not yet in Kuwait. We'll see what happens. There, I'm heartened by some of the sort of return to the capital markets and some infrastructure, financial infrastructure that is prompting some new developments, and maybe we'll see where things go. Sorry, I diverged from your question.
No, that's perfect. I'm gonna go back to Dr. Baboud for my last question, but meanwhile, think up maybe one or two questions. We might be able to take one or two from the audience if our gracious hosts allow. But I wanted to go back to Dr. Baboud to stay on the question of challenges, and I mean it in a very practical sense. One of the things that has happened this week is that there is maybe, perhaps, who knows, we will take a long time to figure out some sort of a path to peace in the Middle East. Again, maybe. And I don't ask you to have a crystal ball. It's early days to understand where that goes. But with everything that's happened in the past 2 years, globally and in the region, what are, again, if you're in the Gulf and you're looking at the next challenges, we've mentioned before supply chain disruptions. Does that remain a problem? Is it investment bottlenecks? Is it uncertainty emanating from the US? Sort of what are they looking at in practice for the next 12 months in terms of, again, threats and challenges to their diversification programs?
Well, thank you, Valentina. The diversification program has started before. It's been on the agenda before the current crisis and will continue to be. The GCC innovation push looks pretty resilient. There are, of course, notes from the IMF that says, inflation is contained. There are strong buffers. There is noticeable continued non-oil expansion. despite, of course, the oil cuts and the global headwinds. We are also seeing, the capital formation is still continuing. The sovereign wealth fund has been active across borders, investors, not only domestically, but also regionally, as has been mentioned, and internationally. We've seen a huge tech build-up, acceleration, UAE, for example, with AI, data centers, Microsoft Copilot, etc. We've seen venture capital is stabilizing, and the ambitions are intact to a very large extent. However, to answer your question, these don't come out without risks, and the risks for a region like the Gulf states are enormous. There are of course geopolitical risks that can spill over into trade and tech channels. There are also other risks like execution risk and talent bottlenecks. There is also financing and policy credibility risk. So in terms of geopolitical risks, we have seen that the Gulf states have been subjected to attacks, and that is unprecedented to a very large extent, namely Qatar, but also there has been threats to the Gulf state. So this is something that the Gulf states will need to live up and understand the consequences of this, and to what extent this is going to affect and disrupt their plans. Obviously, if you add to that, there were Red Sea attacks. There's been, there has been issues, of course, with in the Strait of Hormuz as well. If there's going to be any attacks on Iran, it can escalate the tension and can increase the oil prices, and this could lead to some uncertainty as well. So geopolitical risks are always going to be there because the region, as we know, is fraught with conflicts and wars and so on. And we are witnessing, as we speak, one of them is unfolding now or being resolved. However, the Gulf states have been very, very careful in managing that, in the sense that they have been trying to work as mediators, peace initiators, and so on, and they have done a great job in diffusing tension around the region. But apart from the maritime risk, if you allow me, Valentina, there are also other risks that the Gulf states face in their future transformation, as it were. And this is, linked to the trade war between China and the United States, because this is going to affect them in terms of the licenses and in terms of hardware partners, etc. And that also adds to their challenge, as it were. And also, if there was going to be any issues with the oil price, that especially if the oil price is going to go down, and it might, and that's a possibility, there is also a risk of how they can finance all these different plans and strategies and transformation plans. So there is also a huge risk there related to the price of the barrel of oil. If you add to that, there is also the execution capacity and talent. We have to remember that all these plans, aggressive as they are and ambitious as they are, they compete for the same kind of engineers, technicians, operators, regulators, and there are shortages that can inflate costs or slow the delivery. And if you add to all of this, there is also the cyber risk as well. We have seen that some of the Gulf states have been attacked through cyber attacks, and there has been a regional spillover. Whether conflict with Iran or in Gaza. So all of that can lead to can add to the challenges. And I would also add that there are some policy predictability challenges. There are shifting standards. There is sometimes opaque procurement standards that can deter or delay the partners and the slow of the commercialization. So what can the Gulf states do? They need to work very hard to develop their trade and logistics and harden that roots, as it were, and try and work together in terms of getting their security, regional security intact. And we've seen some of this already taking place. They're trying to maintain a clean supply chain for technology and data, and building data and AI governance baseline. And we've seen some work that they are doing. They're also investing heavily in the human capital by trying to, of course, increase the domestic human capital, but also allow for targeted visas and for people who can help them in terms of AI, machine learning, etc. And they're also working very hard in getting their finances and sovereign wealth funds, not just to invest abroad, which they are doing for future generations, but also they are linking their investment abroad with developing local industry and local capacity as well. They're also working in a very strong way in creating a regional regulatory integration, like fast-track GCC-wide passports for fintech, for AI, and cloud services, etc. And they're building their energy system resilience, where, as has been mentioned, they're not just relying on oil and gas. They are now, looking at nuclear where applicable. There's carbon capture, and of course, all these new technologies, alternative energy resources like solar, and wind. But most importantly, it's been mentioned earlier by developing into green and different shades of hydrogen. So the GCC is still, showing, or the Gulf states are showing their resilience, but at the same time, they are facing these challenges. And the thing to watch for is if there's going to be any choke point risks, like the Red Sea, the Hormuz Strait, is there going to be any export control posture on advanced tech because of the China and US competition, as it were, and quarrels? And is there going to be, how is their physical stance are going to be shaped vis-a-vis the oil price? So if these dials, as it were, are stable, the region innovation thesis and system will remain investable. And in selected segments like AI, infrastructure, grid logistics, tech and climate and water, these are really compelling industries that the Gulf states are seriously looking into developing them. And of course, taking into consideration that there are challenges, but they have built resilience and they have built capacity and they have built experience in how to deal with these different geopolitical challenges. I'll stop there, Valentina, if you like.
Well, thank you very
Happy
much.
to answer.
And I think I've seen already 2 requests for questions. I will go with them and close it there. Does that work? Does that work for everybody here? So there is that gentleman and here.
Thanks. Mark Austin, 25 years a health expert in the Middle East for USAID. I'm looking at this. This has been a fantastic conversation. I've been looking at this with a more sustainable development lens. And in particular, all the innovation that we've talked about, it's been primarily around energy, but there's a lot of innovation in the health tech.
Yeah.
Whether it's genomic research, whether it's virtual hospitals like the Sahab facility, set up in Saudi. I'm wanting to understand from you, and perhaps this would have been a better conversation earlier in one of the broader panels, but still, looking at how does the vision, or how do the neighbors of Jordan, of Yemen, of Egypt, of Syria and Lebanon. We've heard from Syria today, which was fantastic. But how do these fit within that vision of strategic growth and economic investment, short term and long term? Clearly, we don't want to be just reactionary, but how do our neighboring countries fit in the broader strategic vision of investment and growth?
Perhaps we can take the second one as well, and then.
Thank you so much. So with the region with 50% of youth population, I didn't hear a lot about cryptocurrency, about the esports World Cup, about the data mining, and about the sports market, which will be around $600 billion in 2028. And MBS of Saudi Arabia, His Royal Highness, invested in getting Ronaldo, Mane, Neymar, Benzema, Mahrez for a reason. I think there is that digital / economic / whatever social thing that we need to tackle. Speaking about the modern currency, the modern possibilities. Not only discussing oil and gas, which is very important, or even hydrogen, because I don't think these investments were done just for the spending of time or just for the pleasure of, the population that Saudi Arabia won over Argentina or whatever. But there is actually a way for doing something called tokenization right now. And I think this is maybe another session to be hosted by the Gulf International Forum, maybe later on, or with a small feedback from your side, what do you think and where do you think the Gulf countries, the GCC, stand when it turns to cryptocurrency, to data mining, and other contemporary aspects? Thank you.
Excellent questions, both. I should apologize for not discussing these topics. I'm old, that's why they have not been discussed. I'm far older than the population in the GCC, and cryptocurrencies, I don't understand. Tokenization, I don't understand. And if you ask me, it's ripe with a lot of risks. It's actually one of the areas where I'm a little bit more skeptical about what's happening, but it is an absolutely fair point. Perhaps we can somewhat combine them, looking at health, youth, region, and all of these investments that are meant for the future. Perhaps, Rachel, you can start, and then we'll go around, including some final remarks.
And to reinforce your point, I think it was just in the last 10 days, we had Saudi Arabia participating in, I believe, what was in dollar terms one of the largest leverage buyouts, taking a company private, Electronic Arts. Part of it was, this sort of a tech innovation-driven economy, there's so many different aspects. And so, with limited time, so I'm really glad you brought it up. And I've done a lot of work trying to track what different Gulf sovereign investors have been doing, not just in this space, but across the board. And it's helpful sometimes that Saudi Arabia's public investment fund can be a little easier to track some of the investments they make than some of the others. And this sort of cluster of investments in gaming, in game development, esports, really quite a sizable subset, up there with the the electric vehicle ecosystem that I was mentioning earlier. The tokenization discussion maybe does deserve its own conversation. I was almost going to ask the Syrian minister about financial development and that sort of element, a key one. But yes, I think both physical sport, esports, it's really key part of Vision 2030. It's a key part of the visions throughout the region. I'll leave my sort of Omani colleague to speak about its role in Oman, but I think across the board also feeds into tourism, the big events, as well as a desire to keep young populations active and healthy, right? This is a region that if we look at the older population, some of the health risks and whether it's diabetes risks or other things like that, high. So it all ties in there. And clearly there is a desire, as there's a desire to look for higher quality jobs, ones that can benefit from the technological and skill development, which I guess brings us to your question on the regional piece. I mean, there's other things to be said on health tech and health innovation and health clusters, but I mean, I think you've listed a variety, you've listed countries that are newly maybe open for Gulf investment, but ones that there's been a long-standing element. If we think about Egypt, for example, beneficiary of one of the largest Emirati sizable sort of investments, there's a question there about what type of economic development that then fosters. Does it get back to a more, sort of top-down sort of political, political economy dynamic? But I do think part of this element in which Gulf sovereign government investment is closer to home, it not only means domestically, but it also means in the region. So that doesn't mean, people always, call me up and they say, these funds not going to invest in the U.S. anymore. Are they going to invest in China? And the thing is, a lot of them are doing a bit all of the above. And it depends which fund. But I think across the board, you see much more strategic investment. A chunky investment, and that includes in the region. But there are different challenges, I think, when you think about, as we were talking about Syria earlier. There's a great desire in the region to invest in Syria, but there's both the sanctions element, there's always in these kind of circumstances different strings that different investors, want to see happening. And conditionality isn't always the worst thing, but I think right now sometimes it's hard to define what that looks like. I'll let others give their final remarks.
Perhaps on sort of the financial innovation side of things and how it affects your work or any other thoughts?
I'll just try to be short and efficient on that, so a few words only. So when you think about GCC, so every country, they have their own setup. And I like, for example, what's happening currently in Saudi. I think that's a part of, again, their plan to diversify the economy, thinking about, wider range of activity which could attract certain kind of business. Similarly happened in Oman. I think when Oman, if you go and read Oman Vision 2040, we have special attention, for example, for a specific sector. Take some of them, tourism. Tourism is, growing in the country. We are putting a lot of, efforts to make, tourism is larger and larger in the region. Mm-hmm. But also, in addition to that, thinking about the mining, because that's also something very critical. Oman, based on history, it was very well-known country producing, copper. And nowadays, we do have different mix of, metals, which could be a source of material for future kind of, industry and production. Still, I want just to highlight something about data centers, because I think that's something could fit directly to what we are thinking in Oman. I think that's very high intensive energy, kind of business. If you will be able to supply a good, source of energy, I think you can easily accommodate this kind of business. I think GCC, they could all think about this. But in addition, what's make Oman, a little bit more unique in attracting this kind of business, our location, because we are nearby the Indian Ocean, where the Indian Ocean hosted all of these, undersea cable connection between, east and west. I think that give really a critical elements toward Oman, and I think that Oman is already seriously thinking about, hosting more of data center and accommodate this kind of business. So that's in short and brief about that.
And Dr. Bahmood, I'm going to ask you for parting words and wisdom.
Okay, I'll be very brief. I would say that, both excellent questions, and I think my colleagues have answered to them eloquently. But I just want to say that I think there are plans already in place for, between the Gulf states and collaborating in, either esports or data mining and cryptocurrency collaboration. That is already ongoing. Obviously, I don't have exact data on that, but I know that there are plans on that going on. But very briefly, on regional issues, I think the Gulf states have realized that they cannot live in the same pace of development if they want to continue with their diversification and their economic stability in a world that is not stable around them, in a region that's not stable around them. So you can see that they are not only trying to put down some of the fires around and bring in peace through dialogue and through mediation, but also they're trying now to cooperate with the regional countries, whether it is Syria, it is Jordan, Egypt, we've seen in Iraq. There are also links now, electricity grid between the GCC and Iraq. There is also the whole idea of the development route that goes from all the way from Turkey and Europe, of course, all the way via Iraq to the Gulf states. There are a number of collaboration projects that the GCC states are now contemplating with the regional countries, including Yemen and the whole region around them. And I think also there are already talks now about the whole idea of rebuilding a reconstruction of all the damage that has been done in the region, not only in Gaza, which is of course a top priority, but Lebanon, Syria, and Yemen. And if you want to add to that, of course, Somalia and Sudan, there is a huge need for reconstruction, rebuilding, whether it is medical, but also housing, etc., smart cities. These are huge projects that are going to be in the region where the Gulf states are going to play a very important role, and I think the international community as well, and the international partners and investors will have an opportunity to play a role in this. I'll stop here if you like, Valentina.
Thank you very much. This was wonderful. I hope you all had as much fun as I did, and I'm going to give it back to our hosts.
Well, I want to thank all the speakers, the participants, the staff, the hard workers that we've seen here from the Gulf International Forum, and the catering crew, the audiovisual crew. I think today's been a very productive and illustrative day. On behalf of the Gulf International Forum, I want to thank you for joining us and contributing to this dialogue. We look forward to welcoming you again at next year's conference. And above all, I want to recognize the driving force, the founder and implementer of the Gulf International Forum, Dr. Danya Thafer, for having us here today. So this brings to a close the 7th annual conference of the Gulf International Forum. And thank you for your attendance. Thank you, Dr. Thafer. Do you want me to sing the Carol Burnett song at the end of it? Okay, I'm so glad we had this time together just to have a laugh or sing a song. Seems we just get started, and before you know it, comes the time we have to say so long. All right, thank you. I know. The problem is I'm only in